Welcome. So I just mentioned to everybody that we're going to start right now, buying your own home in the Netherlands presentation. My name is Kimar. I'm from Expat Housing Network. We always start a little bit later because we want to give everybody a chance to join. That was, I think, more relevant where people were still commuting back and forth from work. But who knows? There might be still a few people who are coming home from the office and just want to settle down before they join. So I'm from Expat Housing Network, and this is the team that you will probably or most likely meet if you start working with us. As you can see, it's a very mixed team. One of the reasons why we call it Expat Housing Network as well is that the majority of the people working at Expat Housing Network are internationals. They've moved here 10, 12, 15 years ago, and have actually gone through the same process and experience as you have. So what we thought is that was technically probably the best way to kind of like relate and to understand what you're going through, and also to offer the support that you need. My colleague Ludo is here today. He's going to help us out with the Q&A at the end of the presentation. At Expat Housing Network, we believe in transparency, honesty. We're not the typical real estate agency because nobody actually has a proper background in real estate. We have transparent and fixed pricing, so we also don't charge a percentage fee based on the amount that you purchase your property for. It seems a bit strange that you would have to pay us more if you already pay more for a property. So that's one of the USPs that we have. And well, on my screen below me is my dear friend Cesar. Cesar.
Yes. Thank you, Kimo. Thank you again for inviting me to speak during the webinar. My name is Cesar. I am a bit out of breath because I needed to go up and down the stairs twice, so that's why I was a bit late. I was already logged. I'm the founder of Mr. Mortgage. We're all mortgage specialists, and we're specialized in dealing with mortgages for expats, internationals. We also work with a fixed fee, transparent pricing. So if you want to take out extra services, you don't have to be charged extra. You'll get advice from us from A to Z. So not only about mortgage rates, mortgage types, those types of details, but also when it comes to what happens if you pass away, or what does your retirement look like? What do you want it to look like? So those types of scenarios. And this is our team. So yeah.
Perfect. Thank you. Today's goal is to add value to you. We believe in sharing information freely. We don't believe that information is technically the thing that we sell. We sell support. We sell a bespoke service that actually makes sure that you have a pleasant experience and make sure that you can actually make an informed decision. So today we're going to share a lot of information with you. What does that look like? Well, first, we're going to give a presentation, share a little bit more about the current markets, a few reasons why you should buy, but also introduce you to the process, who you'll meet, what the costs are, and what happens if you actually move out of the country. We're going to answer the questions that you have. As per mentioned, Ludo will be supporting us with the Q&A. So please, if you have any questions, pop them in the Q&A or pop them in the chat, preferably the Q&A, so we all have them in one spot. And then at the end of the presentation, we'll tackle all of the questions. Please know that the webinar will be recorded and that the video and the presentation will be shared with you most likely tomorrow. So no need to write everything down. Perfect. Okay, let's kick it off. Maybe first a little bit of information about the market, because there's a lot happening in the world, of course, at the moment. COVID, vaccines, what is going on? It's very difficult to say. There's news about prices going down. There's news about prices going up. So far, so good. Prices have gone up still, and it seems like the home is probably more important than ever. Maybe proof of that is the 81 people that are actually attending this webinar. This is the most we've actually seen in the last few months. And I think that we'll probably see that in the near future as well. Of course, if I would have a glass ball in the next year, 2, 4, 5 years, very difficult to say. But what might be good for you guys to know is that if you look at the housing market, don't compare regions too much, because Amsterdam is completely different than a rural area. Almere is completely different than the south of the Netherlands. Rotterdam, the same thing. Eindhoven, name it. And also supply and demand are, of course, key to what the price will do. In some cities in the Netherlands, the housing market or the housing stock is not growing as fast as the demand is growing. And what you see there is the prices are going up. I think the Netherlands is well, I'm not sure if it's known for the fact that it's not too fast with construction. But over the last 10, 15 years, we've had kind of like a constant, how do you say that? We're behind when it comes to hitting the targets or the quotas. And in Amsterdam, it's the same thing, and in some of the other cities as well. Also, when you buy a property, don't do it for the short term. Don't do it for 1 or 2 years, because that's mainly speculating. You never know what's going to happen in 1 or 2 years. In the long run, what we've seen is that prices have gone up because there's just more people, and especially in some of the cities, you see that the price have gone up quite a lot in the last 5 to 10 years. Okay, so that's a little bit about the market. Very broad, very generalistic. It's more meta than actually micro. If you have any questions about that, feel free to pop them in the Q&A. Then some of the latest news. First is the National Mortgage Guarantee. So for some of you, this might be interesting because when you buy a property under a certain price, then you can actually apply for something called the National Mortgage Guarantee. What is this? This is actually a guarantee that what happens if you, for example, lose your job, you break up, or something truly bad happens and you can't pay your mortgage anymore and you have to sell your house, then this guarantee will actually make sure that you don't have any financial negative consequences. Again, this is only up to a certain amount of the purchase price that you buy a property for. What's good to know is that this year, 310,000 was the max. Next year, it's going to go up to 325. So that's a good sign, especially if you're looking in this price range. Of course, if you buy above it, you can't apply for it. That's truly unfortunate. Then there's also the exemption from transfer tax. Maybe Cesar, you would like to share a little bit more on that. You guys made a really nice template as well.
Yeah. So a couple of things are going to change. So if you would buy a property right now, then you're paying 2% on property transfer tax. From next year on, things are going to change, especially if you're a first-time home buyer, and if you're 34 years old or younger, then you don't have to pay property transfer tax. So you'll be exempt from that. If you're above, so 35 or older, then you need to pay 2%. There's also a scenario where, for example, so if you're buying it as a couple and one of you is younger than 34 and the other is above, then in essence, you're going to pay 1% because you're both buying 50% of the property. So one of you is buying 50% and doesn't have to pay property transfer tax, and the other does. What's good to know, and I need to check if it's online yet, but we've made a calculator on our website, so you can fill out a couple of details and the calculator will show you if you need to pay a property transfer tax or not.
Perfect. Thank you. Then Cesar will share a little bit more about renting versus buying.
Yeah, so initially, when you're looking at buying or renting, it means you need a roof over your head and you have those two options. I'm not going to tell you that you should buy because it's a personal decision based on maybe future changes in your life. So I'm going to tell a bit about why you should rent, because renting your home gives you flexibility. You don't have to think about taxes or maintenance, and there's no down payment required to rent your home. So those are the benefits. The downside is of owning your home is obviously taxes. You need to pay, you need to maintain the property that you own, and it can be harder to move because before moving out, you need to sell the property, and that can take some time. So I don't know if you're still interested in buying a home, but if you're interested, why you should buy a home. Buying a home gives you stability since you don't have to move every 1 or 2 years. Within the monthly payments, you'll build equity. And because the Dutch government wants people to own homes, they give you a mortgage interest deduction. So the interest that you pay for your mortgage, you will get a small benefit every year. The downside of renting your home is rents keep rising. There are no tax benefits, and you're not building up. You're not building equity, since you're spending money, and you will not see that back. Just to give an introduction on an approach. So renting versus buying, we compare two properties, both on Gerard Douwstraat in Amsterdam in the Pijp. One is 80 square meters. The rental price, the asking price is 2,250 euros per month, which would be 27,000 per year. What you're going to spend or burn. When you compare it to buying a similar property, 88 square meters, so more or less the same. Asking price 525K. When you compare the payments, so interest rate of 1.58 as an example, your monthly payments will be 1,832. That's what you'll pay towards the mortgage. Within that payment, you have repaying your debt and the interest payment. So of that 1,832, 691 goes towards interest. So there's already a huge difference when it comes to burning money, because when you rent, you're burning 2,250, and when you buy, you're burning 691. So that is a huge difference. With the, or if you buy a property, obviously you need to pay closing fees. If you compare it to an investment, so when would you hit the break-even point of your investment? In this example, it's in 15 months. So yeah, from a financial perspective, it does make a lot of sense to buy a home. So you're going to pay, we saw 1,800, still the same property. So you're getting a mortgage for 100%. So 525. So let's say you sell the property after 5 years, then you don't have to pay any penalties or extra additional charges to the bank. So the mortgage that needs to be repaid then is 453. So after 5 years, you've already repaid 71K, and if you sell the property against the same price, that's what you'll have in your hand after selling it.
Perfect. So that's just a breakdown of the pros and cons of renting versus buying.
Yep.
Most of you, or some of you, maybe have already made the decision to do this. Some of you might just still be thinking about it. And Serge just talked a little bit about the closing fees, and we're going to break down that a little bit more. So what will you need to kind of like be able to purchase a home? There's a few things. So we call them closing fees, purchase cost, transfer fees, name it. And what's good for you to know is that probably the highest that you'll pay, if you'll have to pay, of course, is the transfer tax. Well, Cesar just talked about that a little bit. If you're 34 years or younger, or if you're buying a property that's below 400,000 euros, then you'll be exempt from transfer tax. So that's the highest amount that you'll pay or not pay. Then there are some fixed fees, notary or mortgage fees. So the mortgage deed that the notary creates is luckily tax deductible. That's what you'll see at the last column. Some of these costs are, what that means, at the end of the year, you'll be able to deduct these of your taxable income, so you'll get some of that money back. The notary also creates a transfer deed. We'll talk a little bit more about that later. The bank or your mortgage broker, luckily those costs are tax deductible. The typical real estate agent charges 1 to 2% of the purchase price. We do not, we charge a fixed fee. The appraiser charges 550, 600, depends a little bit on what the size of the property is. And we also expect that number to go up a little bit next year because some of the criteria that they have to comply with will be a little bit more strict. It's going to cost them more time. The technical inspection or the building inspection costs you about 425 euros. The interpreter, which is mandatory at the end of the process, will cost 250 euros. The bank guarantee, depending if you're going to go for that, and if you apply for the NHG, you pay a percentage of the actual mortgage amount. Combine all of these together, and of course, depending on if you pay transfer tax or not. Let's say if you don't pay transfer tax, take into account 3 to 4%. If you do pay transfer tax, take into account 5 to 6%, and then you're always in the safe. That's what you have to pay out of pocket, because this is not something that you can actually mortgage. If you have this money in savings, that's great, then you can actually start with the search. And we're going to share a little bit more about who you'll actually meet, and we're going to break down the actual process in the timeline. And we're going to share a little bit more information afterwards. Again, any Q&As or any questions, pop in the Q&A. We'll discuss them at the end. For the people who joined a little bit later, this is recorded, and we're going to share the presentation and both the video after the presentation, most likely tomorrow. Who will you meet? Well, first meet Hans. Hans is the notary, is the legal guy, the legal dude. What he's going to do, he's going to create the legal documents between you and the bank and you and the seller. If you buy in the Amsterdam region, he's also going to create the purchase contract. If you buy outside of the Amsterdam region, then the selling agent will draft the purchase contract. What is good to do, double check it if a selling agent creates it. I always find it a little bit strange that the other party's representative is creating a important document like this, so always double, triple check it. The mortgage deed is the deed that actually makes you the proud owner of a mortgage. It's the agreement between you and the bank. And then you have the deed of transfer, which actually makes you the proud owner of the property. The notary will come into play once the offer is accepted. If you're buying in Amsterdam, he'll come into play directly. If you buy outside of Amsterdam, he'll come into play after you've kind of signed the purchase contract. Again, this is the independent party. Most of the times you'll actually pay for this party. So yeah, he's still independent. And he's actually the most legally knowledgeable person in the process. Then you have the appraiser. Where does she come into play? She comes into play before you sign the purchase contract, but after you get your offer accepted. Why? Because the bank will only give you a mortgage of 100% of the value of the property. But who's going to define the value? That's the appraiser. So Michelle's going to go into the property, look at the property, take some photos, look at the outside. She's going to review all the documents, and she's going to look at properties sold in the neighborhood the last 6 to 12 months that are similar. And based on all that information, she's going to say, this is what the value of the property is. Once she's done that, she'll send a report to an independent institute called the NWWI. They're going to check if she played by the rules. Once it's validated, then it's sent to the bank and it's sent to you. This process takes a few days. Make sure you book this person in before you have your purchase contract signed, or at least before the cool-off period that ends 3 days after you sign the purchase contract ends, because that is kind of like your window to say, okay, hey, sorry, it doesn't meet the actual value that I had in mind. I bid too much, or I just don't have enough capital to actually cover for the extra expenses that would incur because the value is a little bit lower, so the bank's not going to give me enough money. Then you can actually pull out and you will not incur any extra cost besides the appraiser. Then you have the building inspector, especially if it's not a new build. Just have somebody come in to look at the property. This person is very good at spotting things that normal people are not seeing because they have a background in construction. They know what the difference is between a horizontal crack and a vertical crack in your property, which could technically make a big difference. Nobody wants to move in and then find out that they have to change the roof or the foundation is rotten and they have to pay 100,000 extra within 6 months. So have somebody come in. This is probably one of the biggest things you'll do or you'll buy, the biggest loans you'll take out. So don't take any risks. I know a lot of people are doing it, but just do your due diligence. Again, also get this person in before you sign the purchase contract, because if something pops up that is out of the ordinary, you might have like a little window to negotiate some of the price or to have the seller actually fix it. And if you're not happy at all with the results of the technical inspection or the building inspection, then you can technically say, okay, hey, I'm not going to move forward. Then you have Robin, the mortgage advisor. He will share all he knows about the life and the things of mortgages. And what we always do, we try to compare banks and mortgage advisors, like we do retail and personal shoppers. Retail, you go into a shop and they'll sell what they have in store. If you have somebody that actually personally assists you, they don't care which store you buy. They care that you're happy with the product that you buy and that you know where you're buying. And that's how we see our friends at Mr. Mortgage. Why? Because they have a range of products they can offer you, whereas a bank just has one, two, maybe three products. Mr. Mortgage and brokers have 25, 30 products to offer, and they'll know what the kind of like the emphasis and the nuances are per product. It can definitely make a lot of difference. A few decimal points in interest can make up for the cost and actually save you money as well. Plus, what I like about Mr. Mortgage is that they don't just give advice about a mortgage, but they'll give wholesome financial advice. So these guys actually come into play before you start. They're probably the first person you meet, or we always advise you to actually meet them first before you start with the process. Why? They'll know what you can actually buy a property for, what your budget is, and I think that's probably the kickoff before you do anything else. And you can actually share the documentation with them as well. Maybe one more thing to mention. I always get the question like, what's a winning bid? Well, the winning bid is the bid that's most appealing to the seller. And in the Netherlands, unfortunately, we don't have something called a pre-approval of a mortgage. Banks or mortgage providers don't like to tell you, oh no, you're going to get that mortgage. That's also a reason why I would advise you to go with Mr. Mortgage. Because why? Because they can actually tell you to an extent if you're going to get that mortgage or not, right? And that's going to help you out because it's going to give you a little bit more room to be creative with your offer. We're going to get to that a little bit later, but a few reasons to go to a mortgage advisor. Then you have the buying consultant. So they're going to help you with the process. This is my colleague, Alana. What she does is she'll actually sit down with you before you start, tell you a little bit more about the market, like we're going to do now, and she's going to assist you during the process. I don't think the added value is so much in finding the right property. We hear a lot of questions saying like, hey, but aren't a lot of properties sold off market? That is a very, very small percentage of properties out there. The majority is actually out there on Funda. Sellers like to see their properties on Funda, and selling agents like to boast how many people they've actually had into the property. So you'll see the majority there. So our value is not so much in finding the right property, it's making sure you can secure the right property and you know what you're buying for. So you don't get any surprises, you buy value for money. So what Alana does, she'll actually guide you through the process, go to viewings with you. She'll actually do property and price research, probably a few of the most important things there. Why? Because the majority of you look at Funda prices and think, okay, hey, I've heard that on average, I need to bid 10% over. But the price that you see on Funda do not reflect what the actual value of the property is. This is what Alana does. Why is it so important? Because you need a mortgage. Most of you probably need a 100% mortgage, which is fine. But if you go too much over, then it could be that the appraiser says, sorry, we're not going to give you that mortgage because it's just not worth that much money. This is where we come in. We actually give you the amount that we think it's worth, which is often very close to what the appraiser says. Most of the time, the appraiser says it's worth even a little bit more. We try to manage your expectations a little bit there, but that's going to help you with submitting that winning offer, winning bid. She will also have a big network of third-party vendors. So talk about notaries, technical inspectors, appraisers, and Mr. Mortgage. We're going to also review all the documents, Dutch documents, the purchase contract, transfer deed, and documents that are related to the property to make sure you can make an informed decision and know what you're signing up for. So those are the people you meet. What's the timeline look like? First, well, you start a search. I'm not sure if you can see my cursor. This is a little bit skewed because this can take anywhere from weeks to months, depending on what's on the market. Let's say you submit an offer, it gets accepted the first time. Congratulations, well done, well done, well done. Then you have a few days to 2 weeks to actually do your due diligence, get the technical inspector, the appraiser in. Then you sign the purchase contract. You have 3 days starting the day after you've signed the purchase contract to reconsider, have doubts, and pull out without giving any reason. Of course, those 3 days cannot end on a weekend or a public holiday. So when you sign on a Wednesday, you're lucky because, hey, it goes over the weekend. And yeah, that's the time where you can, I wouldn't use that time to really think about if you want the property or not. But let's say something bad happens, something happens that you couldn't have seen coming, then you still have the right to pull out there. Once that's finalized, like once it expires, the cool-off period, then technically you're locked in unless you have any clause in the contract that state you can pull out if they're not met. The cool-off period expires, and then you have a few weeks to arrange your mortgage. If you have a good mortgage advisor, they'll do it in a week, 2 weeks. Of course, depending on the time of year, let's say Christmas is not a very good time to get your mortgage accepted. And also holidays are not very good times in general. So that's why we say on average 4 weeks, build that in, then you'll be luckily surprised if you work with the Cesar & Co. And then you have your mortgage application approved, great work. You'll get the final statement of completion from the notary. What's that? That's the overview of costs that you incur minus the mortgage that has been paid by the bank. And then you'll have some extra costs that you actually have to pay into the notary's account. Then you have the final day. That's where you become the owner. You go to the property first, though, to finally inspect it. Make sure that you don't see any things that were not there the last time you saw it, especially big damages, things that are not working. Because hey, a lot can happen in this period. This could be months, depending on when the seller wants to move out. So you go to the property first. Once everything is fine, you go to the notary and then you sign the transfer deed and the mortgage deed. And you have 2 months or a reasonable time. It's not in the law, the 2 months, so it's a reasonable time to actually notify the seller of any things that are not working that should have been disclosed if upon or before the actual transfer. The small addition here is that technically the longer you wait, the more difficult it becomes to prove if it was already like this when you moved in. So don't wait until the last week. Do it as soon as you see or notice it. That's the timeline. Okay, then what happens if you leave the country because you've bought a home? That's amazing. And I think a lot of you might have this question. So we popped this in. What happens if you want to leave the country after several years? I can tell you, you can keep your home, of course, but you have your mortgage costs, or you can sell your home. And Cesar already mentioned that without any penalty or capital gains tax. And maybe the middle one, number 3.3, as I see, maybe Cesar, you can share a little bit more high-level information on that. Can you rent out your home if you want to leave?
Yeah, so you have 2 types of mortgages. One is a residential mortgage or a regular mortgage, which allows you to buy the home and live in it. And you also have a buy-to-let mortgage. Both products are completely different in the way the bank approaches them. So if you want to rent out your home before you want to leave the country, you need permission from your bank. What you will see in the documents that you receive from a bank, that you cannot rent out the property, your apartment or your home, without permission from your bank. How do you get permission? There are a couple of scenarios. For example, if you would leave the Netherlands for a project abroad, so let's say you're working for Philips and you need to do a certain project in, let's say, India for a time frame of 2 years, then the bank could give you permission to rent out your home. Besides such a scenario, a bank will not give you permission to rent out your property, and then you will need to refinance your mortgage to a buy-to-let mortgage. So there are possibilities, but you need to jump through some hoops before you can do that.
Thank you very much. That brings us to the end of the presentation. I see there's some Q&As. Ludo, join the team if you can hear us and see us. And feel free for everyone that's there, maybe pop in your question. Ludo's going to ask them, and if they're from me, Cesar, we'll try to give you our best and most honest answers.
Cool. Sounds good. All right, I think we'll just start with the Q&A section, and then from there on, we'll also check out the chat to see if we have any questions over there. All right, I'll just start with the first question that we got in today. It's from ZBF. He or she asked, part of my bonus is in company stocks. Can I use my company stocks as collateral and then use it to pay once a year on top of the monthly mortgage? Maybe there's a question for Cesar.
Thanks. No. So what a bank does is they look at your income. Income is a broad term because you could have income from employment. You could have income from your own or your own enterprise, or you could have income from capital that you have or from properties that you rent out. So income is a broad term, but banks will always look at income. And company stocks are not considered income, and there's no, we don't have such a thing, unfortunately, as a situation where you can use it as collateral. So I hope that answers that question.
All right, cool. Then let's check out the next one. It's from an anonymous female, single female. She's planning to buy a house. And her question is, if I get married with a partner who has a house, can I rent my property? I heard that I cannot rent out my house.
I think we just answered that question, Cesar. Is there any specific
no
extra information to that?
Yeah, so what, no, if you cannot keep the property without remortgaging it, if you currently have a regular mortgage, so you could keep it, but then you would need to remortgage it to a buy-to-let mortgage, and then you can rent out the property.
Exactly. All right, cool. So just a case question from Ozan. He was born in 1987 August, which makes him below 34 years until August 2021. Is it the case that he gets the situation because he's 34 years old in the beginning of August, or is it like the first day of August or on his birthday? I think that's the question.
So the date that you actually become the owner of the property is leading when it comes to the transfer tax. So let's say you become the owner the day before you actually turn 35, then you'll be exempt from taxes. Please be mindful that if you buy a property that's over 400,000 euros, make sure that the transfer takes place before the 1st of April, because the new kind of like policy was kind of like broadly communicated, and then it came up with kind of like a last minute addition saying like, hey, but if it's more than a certain amount, why are we giving you that money if you already have a lot of money? But a lot of people already bought properties with the exemption in mind that were over 400,000 euros. So they said that we're going to actually start with that rule per the 1st of April. But again, the transfer date is the leading date when it comes to whether you're going to be eligible for the exemption or not. So make sure that for you, at least it takes place before your birthday. And again, if it's more than 400,000 euros, then it takes place before the 1st of April.
All right, next question is from Bagya, if I'm saying that correctly. He or she asks, regarding national mortgage guarantee, if I buy a house of 400K, would the national mortgage guarantee be still applicable for 325K, and the rest of 75K is the only uninsured part? Or is the guarantee not applicable at all if buying price of house is below 325K?
So I think, go for it, Cesar. Yeah.
So if you want to make use of national mortgage guarantee, then national mortgage guarantee will look at the price paid, and it doesn't matter for them which amount of mortgage you're getting, because they simply look at the price paid for the property.
All right. Cool. Well, I will take the liberty of answering the next question from Pia. There will indeed be a recording. As Kimo said in the beginning, we will send it out most likely tomorrow, if I'm not mistaken. So yeah, all right, cool. Then on to the next question from Avinash. She or he asked, how do you visually inspect a property? If something is cracked internally or leaking internally and not visually observed, then what would happen after buying the property to the owner? Maybe that's a question for Kimo in this case.
That's a good question. First of all, by the way, all the questions so far are good questions. Mm-hmm. The difficulty is that if it's not visual, then you technically can't hold the seller liable as well, unless you can prove that he was aware of this. That's why get a technical inspector in or building inspector, because they'll bring some tools. And one of the tools is kind of like this moisture / humidity measurer. What they do is they just hold it against some of the walls and then actually measure if there's a higher level of humidity in the walls. That will actually give you a bit of an indication. But they'll not do that with all the walls in the property, right? So that's the tricky part of it. They'll also visually inspect the property mostly, and they'll bring some tools to actually double check that. If it turns out that something arises that, yes, actually prevents you from living comfortably in the property, you technically have the obligation to prove that the seller was aware of it. The seller does not have the obligation to prove that he was innocent. That's where the difficulty lies. Therefore, always make sure you get somebody who has a little bit more information and knowledge about those properties in there. Double check the property documents as well, because if there's any past records of damages or errors, then the seller should technically make you aware of that. Of course, if that has happened in the time that he's lived there, so that will help you a little bit with the with gauging if there's any issues or you should double check certain parts or not. Also, if it's an older building, like if it's built like in the 1900s or in the 1800s, then yeah, you can make sure that you'll find some things in the 10-15 years that you'll live there, but it doesn't necessarily have to be very bad. So do your due diligence, and you should be fine.
All right. So we have another question from ZBF. I think this is for you, Cesar. Is it possible to get a mortgage with a friend?
Yes, you can. But you need to think about also what happens if one of you gets a partner and wants to live together. What happens to the home and the mortgage? What happens if one of you wants to leave the country? Because in the end, you're both responsible, but the bank will always choose to go after one person if mortgage payments are not done. So it's good. So you technically, yes, you can, but it's good to consider those risks.
All right. All right. Next question from AP. Is it possible to rent out a room in your primary residence? And what are the pros and cons of this?
It is possible. A bank will not. A bank will allow you to do that as long as they're informed and your tenant or roommate will sign an additional letter. So tenants are well protected in the Netherlands. It's not easy to kick them out or to evict them. So what the bank will ask your roommate to do is sign off a letter where your roommate or tenant that is renting a room will have no rights according to tenancy laws in the Netherlands if you cannot pay your mortgage anymore.
All right. Okay. Then we have a question from an anonymous attendee. How much is the down payment normally? Or how much down payment is needed normally?
0%.
0%. Okay.
You can borrow up to 100%, but then obviously, as Kimo showed, you have the closing fees. So that's what you need to consider. But on the property itself, no down payment is needed.
Okay. And then I think a question for both of you. What are your fixed fees?
First, Cesar?
Yeah, sure. Our fixed fee is 3,250, and it's tax deductible, and we don't add any extra charges on top of that.
Okay.
Thank you. Our fixed fee is, we have two packages. We have a smart package and a complete package. The smart package joins you in the process as soon as you've actually seen something that you want to submit an offer on. The fixed fee for that is 1,919. Just make it 2,000 euros. So much easier to say. And then the other package is the complete package, where we actually schedule all the viewings, attend all the viewings, and attend all the meetings as well. And we charge 4,800 euros for that. Unfortunately, it's not tax deductible. We're hoping one day it will, but for now it's not. Yeah, those are our fixed fees.
Okay. Cool. Then we have another anonymous attendee who asks, can you get a second mortgage while having the first one not paid off yet? Maybe for Cesar.
Yes, you can. It depends a bit on what you're doing with the first, if you're getting a second. So is that first property becoming a rental property, or so what are your plans with that? But yes, you can. There's no, you can get a third mortgage, a fourth mortgage, etc. Yeah.
Okay, cool. Is there any additional benefits of 30% ruling?
I expect, or I assume when it comes to the mortgage. So the 30% ruling itself, you could borrow slightly extra. But since the term of the 30% ruling has been shortened to 5 years, you cannot borrow that much extra, maybe a maximum of between 5 and 10K. So that doesn't usually make a huge difference. The additional benefit it has is for the non-EU citizens, it's the residence permit and the type that you have. Some banks have a special policy on accepting highly skilled migrants. So that's mainly the benefit nowadays with the 30% ruling. But if you're an EU citizen, there are no restrictions. So yeah.
Okay, cool. Next question also for you, Cesar. If someone is buying a 3-bedroom apartment and lives in 1 bedroom and rents out the other 2 bedrooms, while still having a mortgage, would this be okay? I think the question was perhaps just answered, but
yeah, you can have roommates as long as you inform the bank.
Yeah.
That's yeah.
Okay.
One thing I would like to add to that, though, is that depending a little bit where your property is, some municipalities actually have restrictions to the amount of people that can actually stay in the property, especially if they're not part of the same household. So in Amsterdam municipality, and we're seeing some of the other municipalities taking that over, they say any property that is inhabited by more than 3 people that are not of the same household actually have to get a permit to actually have shares in their property. So and please be mindful of that, because there are some things that you would need to do to get that permit, insulation and stuff like that. Having a permit means that it might impact the actual value of the property. So please do be mindful of that before you consider doing that.
Okay, cool. So the next question, again for you, Cesar, what happens if the bank does not does not approve your mortgage?
It has 2 sides to it. So one is what is written in the purchase agreement, and I think Kimo can elaborate on that. Second is if the bank doesn't approve your mortgage, then you'll get a letter of rejection. If you work with a mortgage broker, then they can look into what other banks are offering. So yeah, you could. So if you work with a broker, you can go to several banks at the same time. So you could get a mortgage approved still. But you could also use the letter of rejection to cancel the agreement. But I think Kimo can tell you a bit more about that.
Yeah. So I'll see if I can scroll back to the to this slide. So once you've signed the purchase contract and the cool-off period is extended, technically you're locked into the deal. Before the cool-off period expires, you can pull out without giving any reason. What might be good to know is that the actual mortgage application, and like the full mortgage application, will be reviewed once all the documents are present, and that happens after the purchase contract is signed. And then the bank will actually review the application completely. So you're never going to get like a full confirmation from the bank if they're going to accept your mortgage or not before the cool-off period expires, or maybe it has happened a few times. I'm not sure, but not in my experience. So what does that mean? That the majority of you will hear if your mortgage is going to be accepted or not after your kind of like latest date of pulling out has expired. What happens if it doesn't? get approved, then as Professor mentioned, if you have put in the purchase contract that you can pull out if you not get a mortgage, then you can you have the right to pull out. If you don't have that clause in the purchase contract, then it's unfortunate that you can't pull out. So you'd have to keep trying to find financing. If it turns out that you can't find financing at all, then technically the selling party can hold you liable of a fine of up to 10%. And this is probably one of the reasons why no, it's not probably, this is one of the reasons why we would advise you to go to a mortgage advisor, because they'll actually be able to tell you if you're going to get your mortgage or not. Plus, they can act much faster and also act in the best interest of you, because they are also, of course, in favor of you actually getting a mortgage. Where if a bank says no, they're not going to help you get another mortgage with that bank. So it's very positive that you, or it's very likely that you'll have to go to another partner and then start the whole process over again. So we advise you actually go to the mortgage broker to get your support there, and make sure that you know where you're putting in the purchase contract before you sign it. If you're not sure about your mortgage, put in the finance clause. If you are sure about your mortgage because you have the right support, then you can take it out and you have a very competitive offer.
Yep.
All right. So the next question will go back to Cesar again. Is it possible to explain the NHG a bit more in detail?
Yeah, sure. If you buy a property under 325, then you could get something called National Mortgage Guarantee, or NHG. NHG is an institute backed by the Dutch government. And they originally started to help first-time home buyers get a mortgage more easy. And how they do that is by taking away a bit of the risk that a bank has. Especially if you're a first-time home buyer, you don't have a track record, so the bank doesn't know how your payment morale is. So what NHG does is, as Kimo mentioned earlier, if you lose your job and you cannot pay the mortgage anymore, and therefore you have to sell your home, if you have a remaining debt, then NHG will pay that debt to the bank. Same goes if you break both of your legs, you cannot work full-time anymore, and you can therefore not pay the mortgage anymore. Same story. If you buy a home with your partner, again, if your partner, for example, passes away or you break up, you cannot pay the mortgage anymore, you need to sell your home, then again, NHG will pay any remaining debts. So I hope this answers that question a bit more.
All right. Then another anonymous attendee asked, I just recently moved to the Netherlands. Should I wait a year or until I have a permanent job contract to buy a home?
This is a difficult one because I assume it's regarding the mortgage application and your employment. So if you feel comfortable and you feel secure about your employment, then you could move forward. It's not a requirement from banks to wait a year, but it's more a personal decision. Do you feel comfortable having a debt for 30 years on your shoulders? Then you can move forward. I'm mentioning this because the maximum duration of a mortgage is 30 years. But if you feel comfortable, you can move forward. If not, wait a year until you have a permanent contract, and yeah, you can buy a home then.
Okay, cool. Then we have a question from Antonio. He has student loans. How much does that impact him in getting a mortgage?
Good question. So when we calculate how much someone can borrow, we look not at a mortgage sum, but we look at how much you can spend on a monthly base. When it comes to this question, I'll give you a simple example. Let's say you're paying 200 euros per month on your student loans. you can borrow 1,000 or you can pay 1,000 euros per month on housing, then it means that instead of 1,000 euros available for a mortgage, only 800 euros is available for a mortgage because you're already spending 200 on repaying your student loan. How much that would be in a number, that's something we would need to calculate calculate for you, especially. But I hope the example is giving enough of how the concept works.
Okay.
Could I add not something to this question, but something to the NHG question that we had a little bit ago? I think one of the things that also stands out for me when it comes to NHG is the interest rates that banks actually offer you when you have NHG. Could you share a little bit more about that, Cesar?
Thanks, Kimo. Yeah, so your interest rates are so how the interest rate for a mortgage works is the bank looks at how much risk do we have. So with NHG, since they're taking away the risk that a bank has in a couple of scenarios, as mentioned before, so unemployment, disability, etc. Because that the bank doesn't have that risk, they can offer you a lower rate. So that could be a discount. So they will give you a discount of 0.4, 0.5. So that could make a difference. So yeah, thanks for that, Kimo. Yeah.
Then we have someone most likely from the US. He asked, or she asked, what if we would like to pay part of our down payment in US dollars from a US bank account? Will we lose a lot of money in the money conversion?
This is a nice question, and a lot of customers have this question. Yeah, it's yeah, it depends on the exchange rates. It's yeah, there's not a lot you can do about it because timing the market is impossible, and at some point you need to transfer that money. So yeah, it is you could lose money, and you need to pay fees to transfer the money. So yeah, you're going to pay, but fortunately you don't need to make a down payment on the property itself. You're not obliged to do that. So you could look at it from that perspective.
All right.
If you sorry to step in there. If you do want to kind of like pay off some of the mortgage, maybe for a better interest rate or anything like that, then like Cesar said, you'll, of course, it's based on conversion rates, but there's also fees that of course incur when you transfer the money. But if you do know that you want to transfer some of your funds to Dutch bank accounts, start in time, because there are definitely tools that can save you some money. But only if you pay small portions, not if you, for example, pay 100 grand, because these tools have restrictions. But for example, TransferWise and some other platforms, have a look at them, because they'll be able to save you some money there.
Cool. All right. Then we have another question from Bagya. Can a non-visual inspection be done for a house during a technical inspection? For example, any invasive inspection to see if the wood frame panels are not rotting or anything?
It's a good question. So when you talk about wood frame panels, I immediately think about like foundational things, because the inspector is not going to take out a piece of floor. What he will do, however, is look underneath kind of like the property, especially if it's a ground floor property. He'll look at something we call the crawling space. So there should be a latch somewhere. He's going to open that. He's going to go in some of the times, bring his flashlight, and then actually he's going to inspect the foundation of the property, just to make sure if the beams that are upholding the property are still in good condition, if it's not too damp there, and so on. And when it comes to regular flooring, that's a bit trickier. Again, they're not going to take out anything that's stuck or pinned or nailed to the property. So they're not going to open up a wall. They're not going to take out a piece of floor. They're not going to take out part of the kitchen. So that's where the tricky bit is. Of course, if you hear the floor squeaking a lot, or if there's something that causes you to kind of like doubt what's going on there, you can request, of course, the selling agent. And again, he'll bring some tools that could potentially benefit, like knowing what's behind some of the closed services. But again, it's a visual inspection, so he'll just look at what the property looks like, and if there's any visible signs of damage, of problems and issues. I hope that answers your question a little bit.
All right. Then we have a question from Peter concerning the exemption from the property transfer tax. Would you qualify if you would be buying your first home in the Netherlands, but you do own a flat in another country of the EU?
That's fine.
Yeah,
That's fine. Technically, it's about buying a property in the Netherlands.
Yeah.
If it's your first one in the Netherlands, then doesn't matter how many you have abroad.
Yeah.
All right. Quick, good. Then another anonymous attendee. Can I integrate the mortgage with my personal savings? Example given, for example, 100K.
I don't know if I understand that question, and I don't know if I understand that question to be what is being meant by integrating. Maybe you could maybe anonymous attendee could rephrase the question so I can answer it. Yeah.
All right, then we'll get back to that one.
Yeah.
No worries. Then we'll move on to Demetrius. I have an employment contract in Germany while residing in the Netherlands. Can my income from Germany be used for the mortgage?
Yes, it can. Short answer.
Love those.
Yeah.
That's always good. And then we move on to Cecilia. Cecilia asks, what does refinancing your mortgage entail? Any losses?
Yeah, so refinancing your mortgage is that you are going to go to another bank to pay off the mortgage at your current bank, and you'll have a debt with that new bank. The losses, so you're going to break open a contract. Breaking open a contract means you're probably going to fix your interest rate for a certain term. I'll give an example of the most common used 10 years. Let's say after 4 years you want to refinance your mortgage, then you are breaking open the contract with a remaining 6 years, and then it could be that you need to pay the current bank a penalty for leaving them early. How high that penalty is depends on the interest rate that you're paying and the interest rate that new clients are paying. To give you an example, if you, for example, are paying 1.5% per year on your mortgage, and new customers of that bank are paying 1%, what the bank will charge you as a penalty is, the difference is 0.5%. You have a remaining contract for 6 years, so 0.5 multiplied by the mortgage debt multiplied by 6 years, and that's what the penalty will be. So I hope that gives sufficient insight.
All right. And on to the next question. An anonymous person asks, can you please let me know if the initial furnishing cost is included in the mortgage?
When it comes to, if it's furnishing in the way of furniture, then no, you cannot include that. The bank is only going to give you a mortgage on the things you cannot take out of the property. So no, initial furnishing cost, you need to make sure that you have sufficient savings to take care of that. Yeah.
Okay. And then Cesar, if you can explain to us what the broad differences are between regular mortgages and regular mortgage contract and buy-to-let mortgage.
The biggest differences are with the residential mortgage or regular mortgage. You're obliged to live in the property yourself. You can borrow up to 100% of the value of the property, and you'll have lower interest rates when it comes to the residential mortgage, comparing it to the buy-to-let mortgage. With a buy-to-let mortgage, as a rule of thumb, you can get a mortgage up to 2/3 of the value of the property. So 1/3 needs to come from your savings. Your interest rate will be slightly higher, and you cannot live in the property yourself. So you're obliged to rent out the property.
Okay. We'll move on to Emilio. He asks, if my mortgage gets rejected, do I need to repay the appraiser and the other fees when applying for the second time?
That's a nice question, Emilio. No, so you could use the same paperwork, so you don't need to pay the appraiser again. You don't need to pay the technical inspector again, because you can use the same paperwork for the second mortgage application.
All right. Then Angela has a similar question than we had before, but I'm going to ask it anyway. It might be a bit different. She asked, can I buy a house with a friend as an investment?
Buying or getting a mortgage? I'll answer the part of getting a mortgage. Yes, you can.
All right. Easy, cool. Next question would be, can you take out a mortgage, buy to let from the beginning and eventually rent the property?
No. So I think I think anonymous attendee is asking if you can live in it yourself from the start and then eventually rent the property. No, if you apply for a buy-to-let mortgage, then you need to rent it out. What you can do or can consider, we also offer some products that you can switch the mortgage from being a residential mortgage to a buy-to-let. So that could be a potential or a possible solution if that's your wish.
Okay. All right. Let's see. Then we're moving on to Sean. Sean, another question for you, Cesar. Can I structure my mortgage for various stages of repayment to reduce my mortgage interest?
That's an interesting question. So what's good to know, a couple of mortgage lenders already do this. So I already mentioned that within the monthly payment, you're already lowering the mortgage debt. And what some banks do, because you are repaying your debt, they automatically lower your interest rate. Another option you have is, with most banks, you can repay 10% of the original principal per year without any additional charges. So let's say you get a bonus and you want to repay some of the debt that you have for the mortgage, then you can do that without any additional charges. So that could be another way to reduce the interest rate.
All right. Then we have one for you, Kimo.
Hey!
We're back. If I'm buying an apartment directly from the seller without being on Funda or any other website, what steps from the timeline could I skip and which ones still apply?
So if you buy directly from the seller, then technically the same timeline applies, right? So you submit the offer, but in this case, there's no selling agent involved. So the communication that the seller has will be between you and the seller, and therefore also then between the seller and the notary, and between you and the notary. That it could be technically a speedy process depending on how fast you want to take it. But technically, you'd still have to go through the same steps because the same process has to be followed. There has to still be an offer that needs to be shared with the notary or with the person who's going to draft the selling the purchase contract. In this case, if you're buying outside of Amsterdam, you have the freedom to actually ask the notary to set it up. The notary still requires details, and you still have that date where you sign. You still have the cool-off period. You still have the timeline for your mortgage. So what you might win is maybe the time between the first time that you view a property and the deadline, for example, or the moment that the selling agent will take all the offers in. There's a few advantages, of course, buying something directly from a seller, especially if, for example, if you've lived in a property yourself. Let's say you're a tenant and you've lived in a property yourself, you want to buy directly from the seller because you know that person and you're living in their property. And of course, knowing the property inside out is definitely a benefit because you know what it's like to live there. The technical inspection, I would still get somebody in to do that, to double check some of the things that you're maybe not aware of, but it's definitely an added value there. Also, you might not end up negotiating, right? So you might not end up overbidding or being in a very competitive bidding process. So there's definitely a lot of advantages to it. There's also some disadvantages to it because the seller might not be completely aware of all the things that he needs to share with you. That's something that we would urge you to get support from somebody who can actually assist you and make sure that you still do the proper due diligence, right? Get all the property documents and do all the things you would need to do to minimize the risk of purchasing a property that ends up to be a bad value for money property. I hope that answered your question a little bit.
Cool. Then we have a question from Alexi. He or she asks, if a CV kettle is not working, shall the seller repair it?
So the question is not so much is it working or not, but the question is, when did it stop working, right? So did it stop working the day after you moved in? Then yeah, it's very likely that there's something wrong with it. But as a buyer, you have the obligation to inspect the property as well, right? The seller has the obligation to share any information about what is wrong about the property. Let's say the boiler dies a month or 2 months in, then you need to be able to prove that the seller was aware of this. Sometimes it's just bad luck, right? Sometimes if the boiler is old, you can expect it to die at some point or that it needs maintenance. There's a few things that are worth looking into. First of all, how old is the boiler? Of course. Second is when it was maintained for the last time. Was it done by a proper company? And I think the third question is, have your building inspector inspect the boiler. Most of the time, they'll be able to see if there's anything wrong or damaged. So that's something you can do to actually save you the trouble of having to fix a boiler once you're in. But again, once everything's signed off and there's a green light and it dies, it could just be bad luck. If you can find a way to actually hold the seller liable, it means you have to prove that he was aware, and that's a very, very difficult, thing to do.
Tricky.
Sorry, that's not maybe not the question, not the answer you would have liked, but
Oh well. So all right, let's see. The next question, the anonymous entity says, generally we're talking about Amsterdam, which is fair, but I'd love to hear more on other areas as well. Do you have any tips or insights on close by areas such as Haarlem?
So close by to Amsterdam, definitely. What we have seen in the past is that because the capital was very, very popular, prices increased there, and that had a good effect on the, or maybe not so much for you, but it had an effect on the prices in the neighboring cities and municipalities as well. Technically, you can get a little bit more space for your money in Haarlem, in Hilversum, Almere, and so on. But what we're seeing now is, as well, with this whole pandemic, is that people are moving out of the city a little bit, especially people with kids, especially the people that are looking for space, because the whole working from an office thing might take a while before it comes back. So what we're seeing is that the price increases over the last quarter, the last 2 quarters, have mainly been seen in some of the more rural areas. And by rural, I mean kind of like the neighboring municipalities, the places where you have a little bit more space, a little bit more green. It's still lovely, and the prices per square meter are not compared to kind of like city center Amsterdam. Technically, the same thing applies for any other kind of like big city, right? When we talk about The Hague, Rotterdam, Eindhoven, Utrecht, you see city centers, especially the historical centers, are most expensive. And then the further out you go, the more space and the more value you get for your, or value, the more space and the more land you'll get for your property. For your money. So that's something to look into. Definitely Haarlem, I would say, Almere, Hilversum. You can go up north or down south even a little bit more. There's plenty of nice cities around to live in.
And just to add a little bit to that, we talk a lot about Amsterdam because obviously we have the best football club over here of the Netherlands.
Ah.
You guys.
Yeah, oh, that's
I
probably
wanted to
Liverpool there.
Yeah. I said of the Netherlands, so.
Yeah, that's true. That's true.
Yeah.
That's true. That's true.
Well, we agree on one thing then. That's good. Cool. All right. The next question would be: is buying a property a reason for getting the citizenship of the Netherlands?
No, sorry. Not like you can expedite the citizenship thing by buying a property. Sorry.
All right. Quick. Cool. The another question: and the same procedures apply for buying a brand new apartment from scratch?
As compared to a property that's already been built, no, the same procedures do not apply, because if you buy a property that's not finished yet, technically you buy directly from the project developer. Transfer tax do not apply in this case, and the process is a little bit different, because technically first you can't really view the property because it's not finished yet. So where you're buying something of drawings, you're buying something of a promise, and this is where the nuance or the kind of like challenge lies, but also the opportunity, right? Because first of all, if you buy a new build, like maintenance wise, you won't have to face any issues in the first 10, 20 years. There's a lot of high quality buildings being constructed at the moment, also because of the criteria that are in play. But you don't know what the actual exact level of finishing will be. Also, sometimes there's room for you to actually influence that. So please be mindful of what the actual level of finishing will be, and also what the things are that you can influence. From a financial perspective, you're buying something that doesn't exist yet. Yeah. So, Cesar, maybe you can share a little bit more about what that means from a mortgage perspective.
Yeah. So how the mortgage works in that sense of when you so you already mentioned you're buying a plan. At some point, you're going to the notary. Once the mortgage has been approved, the project developer has the right permits and everything is approved. Then you go to the notary, and at the notary, first you're buying the ground, so you'll own that. You're already paying for the mortgage sum in full, so your monthly payments are matching the mortgage sum in full. But let's say, I'll give an example. So you're buying a home for 500K. On day one, you're paying 200K at the notary to buy the ground. The bank obviously transfers that money, and 300K will remain in a deposit. And every time the project developer or the construction company finishes a part of your new home, so let's say the foundation has been put in the ground, at that point, the construction company sends you an invoice for, let's say, 50K. You forward that invoice to the bank, and the bank transfers that money to the construction company until the construction company finishes the property. This goes on, and then at some point it's finished, and then you don't have a building deposit anymore, but you do have a home. So that's how that works.
Okay, cool. And the question from Kunal, he or she asks, what would you recommend one checks on allecijfers.nl to learn more about a neighborhood? Are there other resources to use? Perhaps for you.
Sorry, could you repeat that question?
So would you recommend using resources like allecijfers.nl to learn more about the neighborhood? Are there any other resources like that?
That is actually a good question. So I think there are definitely resources out there where you can check on the quality of a neighborhood, amenities in a neighborhood, and I've also heard of how safe neighborhoods are. But that depends on the input from people that have shared the data there, and it's not always very accurate. So honestly, I can't give you a proper answer on that. I never technically refer people to any of those websites, because I think that the most important thing is that You go to the neighborhood, and first of all, you feel comfortable in the neighborhood. And of course, you find somebody that can actually support you on a local level or actually share a little bit more information about that neighborhood. And it differs really per background. So just the statistics, I wouldn't necessarily gauge or base my decision on whether you would live in a neighborhood or not. The Netherlands is safe, very safe compared to a lot of other cities, whether it's Buenos Aires, Cape Town, Caracas, name it. And I'm mentioning a few, maybe those are on the other side of the spectrum, but technically there's plenty of really good neighborhoods out there. And ask your real estate agents for support there. But I can't guide you in the right direction there. Cesar, you have anything?
No, I thought there was, no, just my personal opinion, go to the neighborhood, see if you like it, go during night, in a normal daytime, not in the middle of the night. Visit the neighborhood in the morning, see what it feels like, see what type of people live there, so you have a good feeling of what it could be like when you live there. I think that tells you more than hard data. Yeah.
All right. And we have a question again from ZBF. What are the average costs for the whole process?
There's a slide in this deck about that. So the closing fees add up to 3 to 4% if you're not paying transfer tax, and 4 to 5% or 5 to 6%. It depends a little bit on the value of your property, because the transfer tax is a percentage. So the more you spend, the lower the kind of like total amount will be, because the rest is fixed cost. But do take into account, if you don't pay transfer tax, you have 3 to 4%. If you do pay 4 to 5, and in some cases even 6%. So that's the range of out-of-pocket costs that you'll incur.
All right. Cool. And then another question from Avinash. He or she missed a slide, so it might be in the presentation already. But how much is needed additional to the loan to buy a house?
I think I just answered that question. It's technically the same, 3 to 4% if you don't pay transfer tax, 4 to 5% if you do. It's in there, and we'll share the slide and the video with you, so you'll have the answers there.
And I think we also both have a tool on our website to calculate the closing fees. So you can visit both of our websites, and
we do.
You can also compare both websites.
We have a new website now.
Yeah, I know. I like it.
That's good.
All right, cool. So then a question from Faizan. If I wish to purchase a property to let, what are the regulations regarding number of people that can register with the municipality? Maybe for you, Kimo.
So as per mentioned earlier, some municipalities crack down on properties that are being shared with too many people. So anything above 3 people that are not from the same household could be required to get a permit for that, especially in the capital. Have a look at that. Even with 3 people, there's some gray areas in some municipalities, but be mindful of that, because one of the things they do not want is that regular residences are being kind of like turned into student houses or properties that are shared with too many people, because the majority of the houses are not built to have multiple people in there. Also with the sound nuisance and name it. And I'm not sure if there's any extra COVID restrictions at the moment, but also be mindful of that, right? If one of the guys or the girls in the house gets infected, and what are the regulations there? So also try to be a good landlord there.
All right. Then a different question for Cesar. I receive a car allowance as part of my salary, but have fully paid for my car. Can this be counted toward my maximum mortgage?
So allowances are always a bit tricky. It depends a bit on how it's structured in your employment agreement. So giving a yes or no answer is difficult in this case. So we would need to check your employment agreement to see what details are before I can answer that. Yeah.
All right. Well, the next question has been asked as well. It has been edited, so I'm going to ask it anyway. Is buying a property a reason for getting the residency?
Nope.
Nope.
Nope. It doesn't expedite that process.
Sure. Then the next question from Anubhav.
I heard, by the way, you can buy residency in, I think it's Cyprus or Malta, if you buy
Greece.
For Greece. Yeah, so there are ways to actually get a European residence. I think that Eric Schmidt from Google did it the other day, or you actually applied for it. So there's ways to do that, but in the Netherlands.
All right, cool. So like I said, Anubhav, after 5-year fixed rate of interest, can I move to a variable rate, or do I need to continue in fixed only and still choose 5 or 10-year fixed? Started with variable, can I move to fixed?
Yes, and yes. No, so when you apply for a mortgage, you need to choose a fixed term. This can be anything between a variable rate, which changes on a monthly base, or you can fix it for 1 year up until 30 years and anything in between. The longer you fix it, the higher the interest rate is, because you're buying security. It depends a bit on, so if you fix it for 5 years, then after 5 years or 4.5 years, the bank will send you a letter and they will ask you if you would like to choose another fixed term, or if you want to keep the existing one. But that's a moment where you can, without any additional charges, change the interest rate. You're not obliged to continue with the one you have. If you choose to have a variable from the start, you can always move it to a fixed rate.
All right. Then we'll move on to the question from Amit. He or she asked, is it advisable to buy a house if the owner is deceased?
It depends if you're scared of ghosts or not. No. What is the difference? If I don't know if there is a difference, Kimo. If the current owner still lives or not?
There's one thing that comes to mind, and that is that if the owner's deceased, then technically ownership of the property transfers to somebody else. It depends a little bit on what's in the testament. Let's say it transfers to the partner. I don't foresee any issues there. If it transfers to the kids, though, and there's multiple kids, then it depends a little bit. But there's one thing that you can do when you sign that bridge contract, and that is actually have the bridge contract registered in the land registry. Why would you do that? It's an extra set of proof that you have a claim to that property. This is the first thing that comes to mind if you buy from siblings who've inherited the property. There might at some point be a situation where one of the siblings doesn't really want to sell the property even after they've signed that bridge contract, or that they've sold it to somebody else, and then you have a claim to that property. The second thing that comes to mind is knowing the condition of the property, right? Let's say the property, the owner is deceased, and again, it's transferred to his kids or to someone in the family. Then what you'll experience is that in the purchase contract, there will be a non-self-habitation clause. What that means is that the seller is not aware of the condition of the property compared to somebody who've lived in there themselves. So that is good for you to know. I think those two are the main differences. Again, do your due diligence. It shouldn't be a problem. Yeah, I think that it's good to figure out how long the property's been vacated for. Also, no, I think that's mainly it. And again, like Cesar said, if you're scared of ghosts, then it might not be ideal.
From a mortgage perspective, it doesn't matter who is the current owner. Yeah.
All right, good. Then we have a different question. Are we charged taxes on the profit that we make after selling the house?
No, there's no capital gains tax. We only have capital tax in the Netherlands.
One thing talking about taxes, and we talked a lot about the exemption of transfer tax. There is kind of like another side of the medallion there, because up until this year, taxes for buying an investment property were the same. If you want to buy a property that you want to let, then technically it's considered an investment property, and transfer tax next year will go up to 8%. So be mindful of that. That's going to impact maybe your ROI on the short notes.
Okay. All right. Then we have a few questions from Lydia. First one is, in order to be approved for mortgage, do you have to have a permanent employment contract?
No, you don't. You don't even have to have an intention to get a permanent employment contract. But again, you need to feel comfortable, you need to feel secure about your future, about finding maybe a new job. So I think it's more of a personal question than a mortgage-related question. Yep.
Okay, cool. And then our second question is, what's the difference between getting the buy-to-let and residential mortgage in terms of applying and percentage? And then she says, what if you do not know if you will leave the country or the period of leaving will be inconsistent?
Yeah, mainly that last part is a difficult question. And again, that is a personal question to answer. The main difference between a buy-to-let and a residential mortgage in terms of applying is, so if you apply for a regular mortgage, then the bank is going to check who is the client. That's the first topic. So what is the background of the client? Do we want to do business with this client? Where are they from? Et cetera, et cetera. Second is, what is the client's financial position? So what is the income? Are there any financial obligations? Do you have any assets? Do you have any debts? That's the second topic. And the third topic is the property itself. So how has it been maintained? What is the value? How financially healthy is the owners association? If you're buying an apartment, for example, is there a current building insurance? What does it look like? Those types of details. So that's how a bank checks if they want to approve a regular mortgage. If you look at approving a buy-to-let mortgage, then the bank first looks at the property. What is the value? How has it been maintained? But also, and mainly, what is the expected rent? And is that enough to pay the mortgage? Is that enough to pay taxes? Is that enough to pay the maintenance of the property? And maybe there is ground lease. So the bank first looks at the property, and then they will look at, is this a client? And do we want to do business with this client? What is their financial position? So it's the other way around. When it comes to mortgage rates, if you have a difference of 1% to 1.5%. So looking at current interest rates, you'll pay double the interest for a buy-to-let mortgage.
All right. Okay, and then the last question from Lydia here is, can you explain what is covered under the bank guarantee?
So the financial clause is giving you security as a buyer. So if you cannot get a mortgage approved, then you can back out of the deal without paying the seller any penalties, any charges. The bank guarantee is to give the seller security. And what is covered under bank guarantee, so you can give the seller security in two ways, either transferring 10% as a deposit to the notary's account, or get a bank guarantee. And the bank guarantee is simply a letter from your bank, and in that letter the bank will state, if our client backs out of the agreement after this date, then we will transfer the seller 10%. But obviously, the consequence would be that you would have a a loan or a debt to the bank of that 10%. So the bank guarantee is to give the seller security that you will not back out of the deal anymore. I hope that answers that question.
All right, cool. Then we'll stay with you, Caesar. And the next question is from Rustam. If I start working as a freelancer or self-employed for my own BV company, can I still qualify for the mortgage?
It depends a bit on your track record. I'll give an example. Let's say you were already working as a front-end developer, but you were employed, and at some point you figured that you could do the same as a freelancer, and you already have a couple of contracts, then you could immediately qualify for a mortgage. If it's a completely new enterprise, you don't have any track record in the Netherlands, then it's either going to be impossible or really difficult. And in those cases, you need a tailor-made mortgage. So it really depends on the whole financial position that you have.
All right. Then we'll stay with you, Caesar. Next question is, do the banks easily approve mortgages on leasehold houses, so the non-governmental lease, and with variable ground rent, for example, given pay 10% ground rent in the first year, and 20% in the next year, etc., etc.?
No, so what you would need to do then is go to a notary to get a certificate from the notary. That certificate needs to be shared with the bank. So we're only talking about non-governmental leaseholds, not about governmental leaseholds. So go to the notary, get that certificate, share it with the bank to see if they approve, and then continue on with the mortgage application. So you need to jump through quite some hoops. Yeah, it's not easy.
Okay. Well, the next question is, we've been talking about 30-year mortgages, but is it also a possibility to do a 10-year or a 20-year mortgage?
Yes, you can. What's good to know, so again, when calculating how much you can borrow, we look at how much you can spend on housing. A simple example, if you can spend 1,000 euros on housing per month, then if you shorten the duration of the mortgage, then instead of, for example, 300 years of a mortgage for 30 years, you could only get 100,000 and repay it in 10 years. So yeah, so yes, you can, but it has implications on the amount that you can borrow. Right. Another thing is financially, it doesn't make a lot of sense with current interest rates to pay off the mortgage as soon as possible, because you're paying on your mortgage rate 1.6%, 1.5% per year. If you invest your money in a fund or in a different type of portfolio, then you could get a better return than 1.5 on average per year in 10 years. So financially, it doesn't make a lot of sense to pay down that quick.
All right. I'm guessing the next question has been answered already, so please correct me if I'm wrong, but the anonymous attendee is asking, is it mandatory condition to have a permanent contract, or can I get a mortgage as well with being on a fixed term contract? It is possible, correct?
You've passed. Yeah.
All right, cool. Next question from Rustam. He has a business of his own. Can I buy it through legal entity and making it tax deductible and rent it out to myself?
Yes, you can, but So Dutch government has stimuli in place to for people to own homes. If you buy it through a legal entity, those. So you're paying 8% on property transfer tax. I don't see a big reason to do it unless you want to build up a portfolio of real estate with, I don't know, 100 properties. If not, then this doesn't make a lot of financial sense.
Okay. Next question, guessing we've already had it as well. Is my annual bonus counted in my income while getting the mortgage, or is it only my monthly gross salary times 12.96?
This is funny. So it depends a bit, again, on your employment agreement. When are you getting the annual bonus? And I don't mean in which month, but what do you need to do? What do you need to do to get that bonus? How big is that bonus in comparison to your base salary? And then it depends on the chosen bank. To give a small example, there are banks who use the average bonus of the last 2 years, of the last 3 years. Some use the lowest of the bonuses of the last 3 years. Some use 50% of the bonus you had this year. So it really depends on the bank chosen and what your goals are. If your goal is to borrow as much as possible, then we need to look into it and we can provide you with a solution.
Okay, all right. Then we have another question regarding the NHG. This person says, you say that if I need to sell, the government covers the amount up to the particular amount, but if I sell, I get the money from the deal, right? What happens to those if the mortgage is covered by the NHG? Can't I cover it myself with the money from the deal?
So in a scenario where you are selling the home for more than your mortgage debt, that gain is yours. If you need to sell the property because you simply cannot handle it because you lost your job and you need to sell it for less than the mortgage debt, then NHG steps in and pays for any remaining debt.
Okay, clear. Then back to Rustam. What is the likelihood in terms of taking a personal loan to finance the money of above what bank thinks house is worth for repairs furniture? Let's say that again. What is the likelihood or the terms of taking a personal loan to finance the money of above what bank thinks house is worth for the repairs or furniture?
Okay. When the financial crisis hit in 2000 or started in 2008, it took the government 5 years to change the mortgage landscape. And what they decided back then is you cannot borrow 110% anymore as you could in the past. No, we're going to lower it so people can only borrow 100% of the value of the property. So, and this includes a personal loan. So you cannot get a mortgage for 100% and then on top of that another loan because you can only borrow 100% of the value of the property. So that's it. There is no other solution than doing it in this way. So you need to have savings to pay the closing fees. If I understood the question correct.
What might be good to add there is like, let's say you want to do some renovations on the property. Then there is room to actually borrow some of that money from the bank, your mortgage. Same thing applies for improving sustainability of the property. There's also some room to borrow. But please inform your mortgage advisor about that, and also your buying agent or the appraiser, because they would have to run reports on that and actually prove what the actual added value is of some of the renovations that you would like to do.
Yeah.
Okay. We'll move on to Belle. Here she asks, as you have explained, if you leave the country without a temporal project, you cannot rent your house. Can you explain further? What does the remortgage mean? Or what are the extra costs or procedure? And is it possible to make any kind of clause with the bank to be able to rent it if you leave? Or how can you prove that you go for a project?
Okay, step by step. So when you're taking out a residential or regular mortgage, then the pricing of that product is based on the way you're using that product. And in this case, so I'll explain it from the perspective of a bank. So as an owner of a property, you'll take care of the property better than a tenant would, or that's what they believe. Because I could give a small example. If you see a leakage and it's your own home, then immediately you would call someone to fix that, or start fixing it yourself, depending on how handy you are. If you're a tenant, maybe you think, okay, I don't have time right now. I have important meetings to attend, or I'm just going on holiday. I'll fix it after I'm back. And then it could be that the value of the property decreases simply because it has not been maintained as well as you would have. So that's why the bank will state in documents that you cannot rent out the property without their permission. Remortgaging, what it means is you have a mortgage at bank A or at one bank, and you take that mortgage to another bank. So that's what remortgaging means, or refinancing. Extra cost involved. Yeah, you need to pay an appraiser. You need to pay for the notary again to set up a new mortgage deed. Yeah, you need to pay your mortgage broker again, and depending on the contract of the fixed rate, it could be that you also need to pay a penalty for leaving the bank early. Procedure is more or less the same. You're applying for a new mortgage, so you need to submit all the paperwork again. And it's not possible to set up a clause beforehand with the bank that would allow you to rent out the property if you leave. So I think I've answered all of the questions.
Well done.
Thank you.
Nice. All right, one more for you, Cesar. Are there any other insurances like the NHG which do not put a limit on the property cost?
Yeah, so you could, and that's, we also advise you on that when you work with us. So when looking into what happens if you get disabled or lose your job, you could get unemployment insurance, you could get disability insurance, you could get term life insurance. So we make sure that we analyze what happens if such a scenario occurs, and based on that, we provide you with the right solutions tailor-made to your specific situation. So in this case, yes, you would get a private insurance, and then there is no limit to what the value of the property is.
Okay. All right. To you, Kimo, would you recommend to buy an apartment near the city center or a house much further from the city center?
I think it depends a little bit on what you're looking for in terms of property to live in, right? I think the first and foremost criteria should be, where do you feel most comfortable? And also, what are your plans for the next couple of years? Out of our experience, like me and my partner, we bought a home a couple of years ago, 4 years ago to be exact. we had a daughter, and now looking back at it, I would love to have spent a little bit more money to have a garden. So do also some planning when it comes to that. When we talk about whether it's a good investment, then I think that's also looking at the potential increase of value, but also the potential stability of value, right? Some of the areas in city center that are historical will keep the same appeal, maybe unless there's a pandemic and people actually want to move out the city, but that's something that you can't really plan or schedule. The up and coming areas sometimes could be interesting to invest in because they're still in development. When I look, for example, at the capital, there's some Amsterdam North, the east of Amsterdam are definitely some interesting areas to buy in. And just have a look at that as well, right? Like look at the infrastructure, look at where, so there was always this thing where the creatives go, that's where kind of like maybe 5 to 10 years in the future, you'll see kind of like extra investments and the regular people go as well. There are definitely some indications that could lead or could be signs of an area being in development and the values of properties increasing there. Again, look first at where you'd feel most happy, because you might end up selling the house after 1 or 2 or 3 years because maybe you'll move to another country, and then the whole investment idea is not that relevant. Then the comfort of living is more relevant. From an investment point of view, do proper research on the area and look at the different indication signs that could make an area attractive in the future. Infrastructure is one of them. For example, if there's maybe new subway or metro lines being installed, that could really boost an area. Also look at the, well, gentrification is maybe not the right word, but it is an indication of values, or at least it being more attractive for a specific target group or audience demographic. I could go on and on like this. I think it really depends on the city as well. Again, in the neighborhoods, there's so many factors here, but it doesn't necessarily mean that the city center. So if we look at the value or value increase of the last 6 months, then the city center of some of the capital and some of the other major cities has not increased as much as some of the rural areas. So there's a little bit of a shift going on. I think the cities will come back. Young people like to go there because there's a lot of creativity, cultural activities, and other young people, right? They're looking for activities, they're looking for a mate. So I think that the energy of the cities will remain, but I think that more and more people will also look into buying in places where they have a little bit more space, a little bit more green, maybe more room for their kids to play. So that could also be an interesting investment or a place to look at. So it depends a little bit on what you want.
All right, very cool. Then we have the next question from Sean. He asked, is it possible to include the renovation cost into the mortgage? And if so, is it a flat rate, an estimate, or do we need to get a quotation to include it?
Yes, it is possible to include it in the mortgage. So Kim already mentioned an appraiser needs to visit the property that you're buying, because the bank would like to know what are we spending money on. In that case, I'll give you an example. There is no flat rate. You can simply give an estimate of what you plan to do. So let's say you want to put in a new kitchen. 10K is the estimated cost. Depending on the state of the current kitchen. So I'll give an example. If the current kitchen is from the 70s, never changed, and you want to put in a new kitchen, obviously, if you put in a new modern kitchen, the value of your home, of your new home, is going to increase. As a rule of thumb, I usually consider 60%, which is conservative in this example, because a kitchen from the 70s could be a bit too old. But if, for example, there's a kitchen that has been placed in the property 3 years ago, but it's not your kind of style, or it's not within your taste, and you put in a new kitchen, then it doesn't add a lot of value to the property itself, because the current kitchen was already useful. and then you could borrow slightly less. But as a rule of thumb, you can say if you're going to remodel or renovate, then you could add 60% of that to the mortgage amount, as long as your income is sufficient to keep the mortgage payments affordable.
Okay. All right. Then we have a question from an anonymous attendee. What is the possibility to get a higher mortgage to buy a house?
You need to have a really good deal where the value of the property is, you need to be lucky. So let's say you bought the home for 300K, and when the appraiser visits the property, the appraiser believes the value should actually be or is 310, then you could borrow that 310K. And if you work with a good real estate agency, I will not point any fingers this evening.
You know any?
But then they could already more or less tell you beforehand what the expected value is going to be, and that could help you a lot in finding the right property.
Out of curiosity, what can you do with that money? So let's say you get an extra 10K from the bank. What can you spend? Can you spend that on a car?
Yeah, okay. So I'll give a more of an absurd example, because with 10K you have the closing fees, obviously, so it will be spent on the closing fees. But let's say you bought a property for 300, but the appraiser says the value is 350. Yes, you could borrow 350, maybe 10K, 12K will be spent on closing fees, and the rest you could go to Vegas, gamble away the money and come back, and still it'll be fine. But it's, again, why would you do that? So that's, but if the value comes back at 350 and you bought it for 300, the bank is going to ask a lot of questions, but the rules say that you can borrow that. Yeah.
I love that. That should be our slogan: buy a home, go to Vegas.
No.
I think the next question is also answered by the previous answers. The question was, can we borrow more than the property value for additional purpose related to the property? Yeah. So I think in this case, yes, in case the property value is higher.
Correct. Yeah.
Yeah.
Just to add, so if another example, if you buy the property for 300 and the appraiser says it's 280, then you can only borrow 280. So in that case, you need to come up with that 20K from your savings.
Cool. Next question is, after 10 years fixed interest, could the interest change a lot as well as my monthly payment?
Yes, it can. So the talk about fixing your interest rate and choosing the right mortgage rate is an important talk, because if you fix it for, let's say, 10 years in this example, then I could tell you in, let's say, 9.5 years what your new mortgage rate could be, because it depends on how the market is evolving. If you look at what happened over the last 20 years, mortgage rates have only decreased, but obviously I don't know what's going to happen in the next 20 years. Yeah, so it could change a lot.
Okay. All right. The next question is from Shaquille. Shaquille has a question about the starting costs. He asks, based on the slide in the presentation, do you have to pay these costs upfront, or do you pay them as you go through the process?
So let me go back to the slide. It's all the way back in front. So transfer tax, the name says it is has to be paid upon the date of transfer, so technically the day before. The mortgage costs, technically the same thing apply. Also the cost for the broker or the bank. The real estate agent also, technically all these costs will be paid, will have to be in the account of the notary the day before the transfer takes place. The appraiser most of the time also shares his invoice with the notary. The technical inspector or the building inspector, depends a little bit which company you go for. Sometimes they request you to pay once the inspection is done. Most often they'll be okay with actually sending the invoice to the notary as well. Interpreter, same thing applies. That person will be present upon the day of transfer, on the day of transfer. Bank guarantee, Cesar, that's also part of the transfer cost, I reckon.
Yeah, yeah,
so on the day of transfer.
Yeah,
NSG, same thing. So so technically, yeah, the day of transfer, the day before, technically, the money has to be in the account of the notary. So let's say that process is a couple of months, then you still have some months to save some money.
Just I want to add a bit to that. The money needs to be available during the mortgage application, because the bank wants to see if you have that, if you have those savings, or else it will all be for nothing. So yeah.
Cool.
And then we have a question from Blanca. Blanca here, she's asked, can you change the mortgage from buy-to-let to residential?
The other way around. Yes, you can always remortgage as long as your income is sufficient.
Okay. All right. And then other question, is it better to buy a new house or an old house when considering financial benefit for long term?
Wow, that is a difficult one, because then we would need to predict if a value of a new home is going to increase more than the value of an existing home. You could consider energy labels, how energy sufficient is a home. I don't know. What are your thoughts, Kimo?
I'd love to make some predictions on this. So again, this is not, this is just my glass ball, because Cesar is right? Long term, it's very difficult to say. What we can say about the now is that, especially in some of the historical centers of the major cities in the Netherlands, you see that put kind of like a property that's newly built there versus a property that was built 100, 200 years ago, then we see that the value currently of the property that has the character is worth a little bit more than the new build property. So that's an indication of how people value the properties at the moment. My prediction, and looking forward, and I think that the pandemic has kind of like accelerated that, is that sustainability is going to be even more important than it was from both a macro and the micro level. So I think people will find it more and more important. So I think what Cesar mentioned about the energy sufficiency will be a thing in the future. We're already seeing municipalities kind of like gear up to force project developers to kind of like hold themselves accountable for a certain standard of sustainability, but also regular like VVEs, own associations, to kind of like upgrade. And especially it starts with housing corporations, that they have to slowly upgrade the level of the energy sufficiency. So I think we're going to see a move in that direction. How long that's going to take, though, it's difficult to say, right? It could be 10 years, it could be 5 years, but I think it's more likely 10, 15, 20 years. So when we're talking about long run, that's the direction I would take it in. But if you can find best of both worlds, find a characteristic building with a very good kind of like sense of sustainability, high energy label, well insulated, good construction, great foundation, and then you have a good investment. It might cost you a buck as well, but down the line, that I think is the best one.
Cool. All right. Next question, most probably also been answered. The question is, if the mortgage amount that I can get from the bank based on my income is higher than the property price, will the bank in the end give me the full amount, or just up to the value of the property? I think, Cesar, you explained it very nicely with the Vegas example as well.
Yeah, so yeah, thanks. But the bank looks at the collateral in this case. So what is the value of the property? Yeah.
Okay. Cool. The next question would be, if my max mortgage based on the mortgage calculator is 230K and I wanted to buy a 350K apartment, and I do have the cash, 150K in this case, and I wanted to pay the 150K for down payment, would I still be able to buy the house and get the mortgage?
Definitely, the bank would only be happy that you're taking up a bit of the risk by putting in your own cash, and therefore they will give you a discount on your mortgage rate. What's good to know about most online mortgage calculators, and it could be that there is more possible than what those calculators show you, because they are usually built up to show an example of an average possibility. So checking it with a mortgage broker could increase those numbers if you want to.
All right. And then we have another question. What is the minimum time for a mortgage? So not the maximum, but the minimum. As we know, 30 is the maximum, but
it depends a bit on the bank, but it's 5 to 10 years what the minimum is.
Okay. All right. Then we are moving on to Antonio. Antonio asks, do I need to have a life insurance? Does not having it affect my chances of getting the mortgage?
So there are only a handful of lenders left that oblige you to get term life insurance. Not having it, and let's say you don't want to have it, then we could look into banks that don't oblige you to get one. But then again, it's also a matter of how comfortable you feel not having it. Small chances that you'll pass away, most likely. But if it happens, it could have huge implications. And just to give you an idea, depending on your age, depending on if you smoke or not, but you could already get term life insurance for €5 per month and cover 50, 60K. That if you pass away, the insurance company pays out 50K. So, yeah, from a financial or from a cost perspective, it doesn't make a lot of sense not to get it.
All right, cool. Then a different question again from an anonymous attendee. If my house of interest is well below sea level and eventually, unfortunately, the area in my house floods, is there a special kind of insurance I can get? I like that question. Very relevant.
That's very unfortunate, but there's no insurance for flooding because the sea level is increasing.
Yeah, it will be specifically mentioned in the terms and conditions of a building insurance that this is way above the insurance company's head. Yeah.
Right.
But fair question, especially for the Netherlands. So there are still some kind of like spots and plots. There is a website actually where you can see what's above sea level. So when you're thinking about long term, but we have very good kind of water protection methods. So
definitely
we're known for our dikes in the best way possible. I meant that.
Cool. All right. Can you combine a 100K mortgage with a 200K savings to buy a property? Cesar?
If it's meant as a down payment, yes, definitely. You're not obliged to get a 100% mortgage. So yes, you can do that. If it's meant as 200K savings as collateral, no, that's not possible. Because the bank in the end is going to look at income. If you have assets worth of 2 million, for example, and those 2 million is giving you some income because you've invested that, then that return could be used to get a mortgage. But then again, then that 2 million becomes income. So yeah.
Okay. The same person asks if someone wants to buy on cash, is that possible? And what are the benefits or losses?
Yes, you can. I think Kimo can answer what it will mean from the process perspective. From a financial perspective, it doesn't make a lot of sense. It's with the current interest rates, it's better to get a mortgage. But yeah.
Money is cheap. Money is cheap.
Yeah.
So interest rates are low, and as Professor mentioned, you have interesting schemes here in the Netherlands. So they want to motivate people to own homes. So they give you a discount on the interest by making it tax deductible part of it. So so yeah, you can buy something with cash, and definitely from a competitiveness perspective, it adds value because the seller technically wants a sense of security that you're going to move forward with the purchase, right? And if you compare your offer to somebody else who says, I'm going to submit an offer, but I only know if I'm going to move forward as soon as I get the full confirmation from my mortgage provider, that could mean that the seller won't have that security for another 6, 8, 10 weeks. And if the seller wants the transfer quick, then buying with cash, or at least the indication that you have cash, or just paying off the property in cash, could mean that you could speed up the whole process because you don't have to wait for the mortgage, and the seller will actually feel secure, because once you've signed that purchase contract, technically you can't use financing anymore to pull out of the deal. So it definitely makes your offer more competitive. There is a way of actually taking out that or taking away that worry from the seller without buying in cash, and that is by actually taking out the finance clause. This is something that I would only advise if your mortgage advisor, your mortgage broker is confident about your case. Otherwise, it's too risky. If they're confident about your case, then it's definitely something worth considering, especially if you're in a competitive market, because then it equals almost to a offer with cash. The only difference is that you would still have the same timeline as somebody with a mortgage, because you would still need to get that mortgage, whereas somebody with cash could turn over the property relatively quickly, because once the purchase contract is signed, all the deeds are set up, then they could transfer relatively soon.
Right. Cool. And Cesar, can you explain what are the factors that support a better bank loan or mortgage?
Okay. Mainly two things, because I already mentioned income is the foundation. So income, so having a indefinite contract helps. Having no debts helps, and putting down money to pay the property also helps, because the bank has less risk. So if there is a situation where you need a tailor-made mortgage, then paying down could help us to sell your case more easy to the bank.
And that's to add a little bit to that. I think that is also, and I'm not trying to sell Mr. Mortgage or Cesar, but what Dale explains well when it comes to the process is that the story has to make sense, right? The story has to match and has to be correct. That is told to the mortgage provider. So that's the added value of getting a mortgage advisor, mortgage broker as well, because they'll be able to actually shape that story in such a way that it's going to be very easy for the mortgage provider to say yes to it, or easier than if you would do it yourself, or if a bank would request all the information from you. So I think that also adds value there to getting your mortgage secured.
Okay, all right. And then I'm guessing the same person asked, is it better to pay off the mortgage later, comparing 20 years mortgage versus 30 years, for example?
Yes, it is. Obviously, depending on your future expectations, income-wise, but simple example, today you're buying a sandwich at the store for €6. I can already tell you in 20 years that sandwich, you're going to pay €12 for it. So in that sense, money
buy the sandwich
losing.
now.
Yeah, exactly. especially if you are hungry. No, but what I'm trying to say is, so it's better to spend if there's a way to spend money later versus now. It's going to only get easier in the future to pay off your mortgage. So yes, it is better to pay off the mortgage later. Yeah.
Okay. All right. Then this person also has a bit off-topic question. But is there any way to check if the house is haunted? I'm guessing this is the same person who asked.
So there are some building inspectors who are shamans as no, that's very tricky. Maybe burn some sage and go there at night.
Exactly. We're glad to help you out.
Thank you for this question.
Let's move on to Carol. Carol says, I already have a mortgage in Spain with a very low monthly payment and the property is rented. Would that affect the maximum mortgage that you could have from the bank here in the Netherlands?
So this question has two sides to it. First off is, so I mentioned the bank is going to look at income. Income is a broad term. In this case, if you tell the bank, or if you can show the bank that you have a tenant in the property and the property is rented and you have rental income, then with 9 out of 10 banks, you could use that rental income. So that's one side to it. The other side is, so yeah, you could increase the maximum mortgage. The other side to it is, do you feel comfortable doing that? Because let's say you don't have a tenant for 1 year. How are you going to pay for 2 mortgages? So it's good to consider the risk you're taking on.
All right. Next question is from Marielle. How is the relation to income and mortgage? In my country, normally you would need to have an installment of 30%.
So we look at the gross income, and then depending on how much you earn, the percentage that you could use is around 25%. Example, gross income, 4,000 euros per month. That means 1,000 could be spent on housing. Yeah, that's the example. Yeah.
Okay. She has another question. She has a resident permit for 5 years. And now she has a 1-year contract for a full-time job. Her partner is Dutch. Can we request a mortgage?
Yeah, you can. As long as you have a residence permit and as long as you have the Dutch tax identification number, the BSN, you can apply for a mortgage.
All right, cool. And then we have a different question. Are there any Islamic finance mortgages available in the Netherlands?
No, we don't have any Islamic banks offering those types of products.
Okay, clear.
The legal system doesn't work in that way as well. Just a bit of background.
Then we have Aurora asking, in case you have to rent your property, is there a difference between renting to a tenant or renting like an Airbnb in terms of getting authorization from the bank?
Airbnb is a difficult one. It's a gray area. If you ask the bank, then no, they will not approve because a lot of things can happen. We've all read or heard about these horror scenarios with Airbnb tenants crashing your home. So the bank will not allow you to do that. Another part of it is, does the municipality approve? But I think Kimo can tell you more about that. Yeah.
Yeah. So when it comes to rental law, there are several types of rentals. You have holiday rentals, which is technically Airbnb, and some of the municipalities have restrictions. I know Amsterdam has a restriction of up to 30 days, and they also have several areas that are just banned at all. The lobby has been opposed of Airbnb more recently. So I think we're going to see some more crackdowns on that part. Then you have short stay, which technically you'd require a permit for that, and that is you can rent it out from 5 days or more, and then from 6 months or more, it becomes regular rental. From a mortgage perspective, for all three, technically you would require the go ahead. But again, as Professor said, I don't think they're going to they're going to give you the go ahead when it comes to holiday rentals, or the rest as well. But I think that one thing that's good for you to look into is also, what is the owner association thing? Do they have any bylaws saying that you can rent out your property, whether you can rent it out through Airbnb? Because they also have a say in it. Owner association is kind of like the association of owners in the building that you live in. Sometimes it's just the vertical block, so it's 4 apartments. Sometimes it's the whole flat, so it could be 40, 50. Sometimes it's a very big owner association of 400 apartments. So please be mindful of what the bylaws are there. And then if you require a permit or not, and don't stay yourself blind on the income, because there's also taxes that apply. So you have tourist tax, and figuring out what the actual income tax is going to be on this depends also, or should also shape your decision.
Okay. Then we'll stay with you, Kimo. How safe is the Netherlands geography-wise, provided most of the country is below sea level?
It's safe. It's safe. The last time something happened was 54, I think. That was in the south of the Netherlands. One of the dikes that I think it broke. So there was a flooding there. This is probably one of the things that we don't really shorten our investments on, because it keeps our head above water, literally, or well, yeah, out the water. Maybe I should say that. So technically, I would say it's a decent investment. Again, I'm not an expert on this, right? If sea level rises, like, what do I know about the effects of it rising 2, 3, 4, 5 centimeters? I have no idea. So I wouldn't be able to guarantee that you're safe, but I think that you're safe as any from kind of like long-term climate change effects, because yeah, any other country will have its own kind of like effects happening to it, whether it's drought, whether it's overheating, name it. But I think the Netherlands is as safe as any other
Cool.
country.
I agree on that. All right. Question from James. Could you borrow a personal loan from the bank for all starting costs in order to obtain property? And is this, or would this affect the bank decision on your mortgage?
Yes, it does. So you can borrow up to 100% of the value of the property to purchase a property. So yeah, if you would get a loan right before, then it's going to have an impact on the mortgage getting approved.
Okay. And back to you, Kimo. Do people overbid even for places far outside the city center of major cities? The overbid above appraisal value is an upfront cost?
There's 2 questions there. One is, do people overbid outside the city center? It depends. I think that overbidding is likely to happen, because what happens is that often the price that you see on Funda is often a little bit below the actual value. Selling agents want to save face and also show how well they're doing. So what they're going to do is they're going to try to get as many people in as possible. So they'll probably put the property up for maybe at the bottom range of the market value. If it's an opportunistic selling agent or a selling party, then they could actually put up for the price that's above market value, actually, but that's a risk there. So always look at the actual value of the property. It's not unheard of for rural areas to also be relatively competitive. Of course, it depends on where you look for. If you look in the northeast of the Netherlands, depending on where you look, it could be not that competitive versus the outskirts of Rotterdam or the outskirts of Eindhoven. But it's not unheard of. But base your decision on the value of the property. Don't base it on the asking price. And then the second question was, what was the second part? Udo?
Oh, sorry. The second part is the overbid above appraisal value. Is that an upfront cost?
So if you bid over the actual value of the property, then the bank is not going to give that money to you. So that's out of pocket. Yeah.
Okay. All right. And then Cesar, the tax deduction on mortgage interest is throughout the term of the mortgage. Is that
yes, it is. There are two things to consider. So when we set up, when we look into the actual mortgage interest benefit or the tax benefit that you receive, if you receive an overview from us, we already take into account the homeowner's tax that you need to pay. And we already deduct it from the benefit that you're receiving. So that's one thing. Another thing is if you don't live in the property anymore because you're leaving the property or you're leaving the country, then the deduction also disappears and is not applicable anymore to this specific property. If you move to a new home, you buy that new home, then on the new home, the mortgage interest deduction starts again.
Okay. All right. And what is the typical amount of percentage of overbidding you notice in Amsterdam and nearby areas?
So I get this question a lot, like what do I have to overbid? And I think that I can give you a percentage right now, but what that's going to do, it's going to like give you or send you in the wrong direction, because as I mentioned is look at the value of the property. Don't look at the asking price, because if I say 10% on average, then if you have that number in your head, you might be overpaying and you might end up actually buying something that's not going to be fully covered by a mortgage, or that you have to spend more out of pocket on than you're actually planning on doing. So look at the value of the property. This again, like I don't want to sell myself, but this is where we come into play. We can actually give you the range there, what the value is, and then based on that, we can say, okay, hey, technically it's already worth more than 10%. So maybe you should actually, because it's very competitive, maybe offer a little bit more. Or we say, honestly, it's actually priced a little bit above the value, so we would technically offer a little bit less than what it's asking for. In the end, of course, it's a bit of a balance, like what's the winning bid versus what's the actual value of it. Emotion comes into play, of course, here as well, like how badly do you like the property? Also, where in the process are you? Sometimes we get people who are desperate. They've submitted like 6 offers, and I've been there, right? Before I went into this business, try to buy the property, and I put an offer after offer after offer, and at some point I was like, you know what? Let's just go all in. Luckily, we were happy to find a property that was good value for money, but this also plays into what the actual winning bid is going to be. So I'm not going to give you a percentage because it's going to send you in the wrong direction. Look at the value of the property. There's ways of actually figuring that out. So that.
Okay.
Sorry.
And the next 2 questions are quite alike, and I think both have been answered, so I'm going to combine them. From TE, is there an upper boundary on the 2%? Read somewhere that it's up to 400K. And then the question from Matilda is, hi, regarding the transfer taxes, what will happen if the house is above 400K? As she's a first-time buyer and under 34. So let's start with TE. Is there an upper boundary on the 2%?
So between the 1st of January and the 31st of March, if the handover date of your new home is between those 2 dates, then there is no limit to how much you are buying your new home. After that, there is a limit of 400K. So if you buy a home of 500K with a handover date on the 1st of May, then you're going to pay 2%, so 10,000 euros.
Right.
And can I say one thing? I am I just changed my headphones because the battery, and I must say this is a new record. I'm super happy to see all those questions come in. So keep popping them in. But sorry, I'm just very
if I may, then my battery just said, Ludo, you need your charger. I'm gonna go ahead and pop in my charger.
Cool.
Yeah, back to you, Cesar. Again, regarding the transfer taxes, what will happen if the house is above 400K in that sense?
Yeah, so that's the if you buy the property between the 1st of January and 31st of March, then it doesn't matter. And by buying it, I mean the handover date is between those two dates. If the handover date is after, then you need to pay 2% on the transfer tax. So again, the example, 500K, handover date is on the 1st of May. You need to pay 2%, or in other words, 10,000 euros. If you buy it, or if the handover date is on the 1st of March, then you're paying 0% transfer tax. I try to keep this talk as long as possible. So you would
made it back just in time.
Like, oh, that's a long-winded.
Thank you very much. All right, we have power, so we can keep going. Nice. Then maybe a question for you, Kimo. What do you mean with new builds for the transfer tax?
New build is a property is not finished yet, so technically you're buying it from the project developer, and therefore it's still under construction. Yeah, there's no transfer tax there. Yeah.
Okay, cool. Then from Matilda, what is the tax rate when we sell a property and make value of it?
0%.
None. Yep. No capital gains tax in the Netherlands.
Yep.
What will happen? Question from Andrew. What will happen if the contract is signed but mortgage is not approved?
Yeah, we answered this question, I think, a little bit before in the session. If you don't have any clauses in the contract that allow you to pull out, then you're screwed a little bit, and you'd probably have to look for another way to get your mortgage. If it turns out you can't get your mortgage, you'll be eligible for a fine up to 10%. If you have a clause that states that if you don't get a mortgage approval up to the value of the property, then technically you can pull out. So there's not much to worry about. Yep. You'll probably incur costs because you'll have the cost for the appraiser, technical inspector, notary, maybe some cost for the mortgage broker or bank as well. Nope. No cure, no fee. Take that into account. But yeah.
All right. Cool. Then the next question has been answered as well. And the question is, do you need a permanent contract for getting a mortgage? I'm going to take this one again and say that you do not need a permanent contract. Right?
Yeah. Yes, pass the test again.
I'm getting it, girl. And then from Andrew again, if I move out of the country, is it possible to rearrange my mortgage to be able to rent the house? So then again, from buy to let.
Yeah. By the way, Cesar, Ludo's going to replace you next time. So he's
I know. He's the better looking version of this.
I wouldn't say so. It's the lighting. It's the lighting.
No, but it is possible to rearrange the mortgage. So remortgage it, refinance it. Yeah, cool. It is possible.
All right. Then we move on to Megna. Does the type of work contract matter for taking mortgage, like a temporary contract for a year? Same question, same answer, I think.
Yep.
So in this case, it does not matter what kind of contract you have. The question from TE, is a yearly variable bonus seen as income?
Yes, it does. It depends a bit on the bank, how they look at it, how much they would like to use of it, and it also depends on what is written in your employment agreement on when you're getting that variable bonus. Is it a personal performance because you're working in sales, or is it because the company is doing great? So all those details will be taken into consideration.
Okay. And then from a anonymous attendee, and let's say I'm starting a process in mid-December and the house price is around 325K. What happens to the NHG when mortgage approved in December 2020? And what happens to the NHG when the mortgage is approved in January 2021?
You could already apply for the NHG rules and regulations of 2021. So that it's December right now doesn't matter.
Okay. All right. Yeah, question for both of you. What is included in the fees for Expat Housing Network and for Mr. Mortgage?
Shall I start, Kim? Or so what is added or included in our fee is the brokerage. Brokerage is the communication and the paperwork towards the bank. So simply making sure that your mortgage gets approved. That's one part of it, and the other part of our fee is advising you on mortgage rates, mortgage types, but also what happens if you pass away, what happens if you lose your job, get disabled, what does your retirement look like. We offer solutions and we don't charge any extras for those solutions. If you need translations, we provide you with those translations. So we have all documents from banks in English, so you can understand what you're reading and signing. So that's all included in the fee.
Okay, cool.
As we mentioned, we have two packages. We have a smart package. What's included there is a second opinion on the property that you're interested in. We do price research, property reviews. So it comes to the documents of the property. We review them. Then we'll discuss that with you to come to kind of like a winning bid. We'll draft the offer. We'll submit the offer. We'll negotiate on your behalf. We'll book in third parties, notary, technical inspector, appraiser. We'll review the legal documents, so the bridge contract, the transfer deed, and we'll review the statement of completion with you. When you're not working with Mr. Mortgage, we'll chase the mortgage broker or the bank to make sure the mortgage is done in time, and we'll set you up to help you out with the final inspection. If there's any questions after you've transferred or you've become owner of the property, then we're of course there for you. And this is the smart package. The complete package is everything in smart, but something extras as well. So we actually schedule all the viewings for you. We attend all the viewings with you. We attend all the meetings as well. So that's the notary meeting, that's the technical inspection, that's the transfer and the final inspection. The added value there is that we technically hold your hand literally throughout the process, whereas the first one is for the more independent home searcher. So those are the two different packages, and the fee is that.
Nice. All right. Then the next question from an anonymous attendee. If my wife is 30 years old and I am 36 years old, and if we make my wife the primary owner and me the secondary owner, do we still get the 2% tax exempt?
So there are some things that the government has put into place. So obviously they've thought of smart people who decide. So in this case, your wife is 30 years old. So make your wife a 99% owner and you only 1% owner. But in these types of scenarios, especially if you're married, then there's no way of getting around the 50-50 division. If the division stays between 40 and 60%, then you could do that. But anything above that, those two numbers, no, it's you still get the 2% tax exemption, but only for a small part, between 40 and 60%. Another thing is, so technically you could do that, 99% and 1%, but when it comes to getting a mortgage approved, then the bank sees implications, because then your wife's income would be considered for 99%, or should be able to afford the 99% of the value of the property or the purchase price. and your income would only be considered for 1%. So that's another implication. So I hope that answers the question.
All right. Then we move on to Matilda. Matilda asks, if the owner made an extension bigger than stated in the work pyramid, would it be shown on the survey report?
If the owner made an extension that's bigger than the permit, would it show in which report?
The survey report.
The survey report. So there's a couple of things. First, we're talking about the actual documents that you would receive from the owner. And the owner has to, of course, offer everything that he's requested, done, and knows. And part of that is the actual permit, the permit to actually build and extend. And there should also be kind of like plans for the extension. If the permit says that it's not allowed to build more than a certain amount of, for example, square meters of your roof terrace or extension or name it, then that should definitely reflect in the report that we give you. Not necessarily always in the report that the technical inspector gives you. The technical inspector looks at the actual condition of the property, and they don't review if the permits requested are according to the actual build. So that's something that we look into.
All right. Then back to you, Cesar. Are there any fiscal benefits to open a mortgage being registered as fiscal partners?
So the funny thing is, as soon as you buy a home together, you're already becoming partners for the tax authorities. So that is automatically happening.
All right, makes sense. Question from Irving. Are mortgage payments fixed over the agreed period of time, or can you make larger payments in advance during the period?
Yes, you can. You can repay 10% per year with most banks. Some banks have 15%, some banks have 20%. But with most banks, you can make an early payment of 10% of the original principal per year without additional charges. So, yeah.
Okay. Kimo, due to the COVID-19 situation, do you expect a decrease or a stabilization in the price in Amsterdam?
Good question. I recorded a video a couple of months ago, and in that video, I said that the prices are going down at some point. But there's a few factors that have changed, kind of like or have made that prediction not come through. One is that the government has certain schemes in play that kind of like prevent the economy from being impacted too heavily by the COVID crisis. And they're hoping that the vaccine and next year will actually mean that people start spending again. But of course, like it's inevitable for something to happen. But what we're seeing at the moment is that homes are becoming more important than ever, right? So that could balance out part of the impact. I do, however, think that I always compare it a little bit to kind of like stubbing your toe against the table, right? It takes a few seconds before you start feeling the pain. And I think that's where we are right now. We're kind of like waiting for something to happen. And I'm holding my breath. And again, this is a prediction. I don't know what's going to happen exactly, but I do know that we're in the middle of it, right? And it could be that it's in the middle of like a tornado where it's quiet and you're like, okay, hey, everybody's kind of like used to what's going on. And then at some point it hits us again. I don't want to be kind of like like picture a doomsday scenario or anything like that. I do think that what we've seen the last 6 months is that people are investing in houses more than ever because it's become their kind of like main place to be at. If that sustains in the next couple of years, then I think that that we won't see as big of an impact on the housing market as maybe in some other sectors. Amsterdam, I think Amsterdam is a beautiful place to live in. I am biased, of course, because I live in it. Although I must say, I'm also a little bit jealous of the space in some of the other cities. But Amsterdam is, of course, like if you ask some people from abroad, okay, hey, do you know the Netherlands? Then some say, oh, isn't that the capital of Amsterdam? And that means it has a very popular name, which means that when it comes to like relocating or moving or attracting talent from abroad, it's well, you guys moved here for a reason. So I think that is a benefit, especially if quality of living remains important or is going to become more important compared to, for example, New York City at the moment or London. Or there's so many technically factors that play into what makes a city or a country attractive to live in. Political factors, quality of living. Do you have to take a tube for an hour and a half, 2 hours to reach your destination? If not, if you can work from anywhere nowadays, like why wouldn't you go to Amsterdam, right? Why would you stay in a super expensive city? Okay, Amsterdam is not necessarily cheap, but compared to San Francisco, compared to London, then hey, it's not that bad either. So I think that we'll see more migration towards some of the cities that have been underrated, and I think Amsterdam has been underrated. So I think that could mean that the price levels stay stable or could even increase. But again, I don't have a glass ball. I think there will be some effects of COVID. I just don't know when. I expected it to happen already. Of course, I mentioned in that video, depending on how long the government continues to support, and also what the behaviors of the neighboring countries, right? We don't know what Brexit will do. We don't know what, we didn't know what the American election would do. The same thing applies for some of the other countries. So it's difficult to say. I think there's going to be some effect, but how big and how long? It could be a small dip, and in 2-3 years, it's going to go back up again, right? Because if we look at the long-term statistics of housing prices, then how often do you hear people say, oh, I wish I would have bought like 20, 30, 40, 50 years ago? And I think we'll have similar situations in the next 10, 20, 30, 40 years. Unless there's a big kind of like uproar from the government and the public saying that we should sponsor wealth less than work, then there might be change. But honestly, I don't foresee that happen because there's too much money in government to not protect themselves. Oh, I could go on for hours about this.
All right, cool. Well, for now, let's go to the next question. Next question from TE. Is the interest rate tax deductible if you move to another country?
No, you need to work and live in the Netherlands. So mainly the working part and paying income tax in the Netherlands is the most important factor. So you need to pay income tax in order to have the mortgage interest to be deductible.
Okay, all right, cool. And then for Daphne, what are the benefits of getting a mortgage from a bank versus an insurance company or entity? Is there any difference?
Yeah, the main difference is, but this is not a bank versus insurance example. Main difference is what are the terms and conditions of the bank, or what are the features of their products. When it comes to rates, traditionally, insurance companies have better rates if the fixed term is longer. Banks have better rates when it comes to short-term rates. So that's the main difference. When it comes to security or safety of those institutes, it's the same.
Okay. All right. Then a question from Conrad. Once you have the mortgage, can we switch jobs thinking getting worse conditions afterwards affect the mortgage?
I'll give a personal example. When I bought my first apartment, I was working at one of the big banks. And then at some point I started Mr. Mortgage, not knowing what's going to happen. The bank only looks at the current situation, and they will not look at what your income situation is in 2, 3, 4, 5 years, as long as you keep on paying your mortgage.
All right. Then another question from TE. And do I need the bank guarantee if I borrow 100%? How does that work with the third party?
Yes, you do. There is one scenario where you don't need to have the bank guarantee, and that is if the deadline of the bank guarantee and the handover date are on the same day, because then the bank is already transferring 100%, and then you don't need to transfer another extra 10%. But if that's not the case, then yes, you need a bank guarantee or transfer 10% to the notary.
All right. Then we have the last question coming from the Q&A section. Then we have a few left in the chat, so we'll go over them as well. The question is from anonymous attendee is, again, if I have 30% ruling and the mortgage is taken in with the partner who doesn't have 30% ruling, how does that affect taxation of our income?
So this question, there is a, so if the partner with the highest income also has the 30% ruling, then it doesn't have a big impact on the situation. If the partner with the 30% ruling has the lower income, then potentially, depending on the lender, it could mean that you can only borrow 85% of the value of the property. But this depends on the lender. What is good to know, so next year a couple of things are going to change. One of the biggest changes is that when you buy a home with your partner this year, so the partner with the highest income, that income is taken into account for 100%, and your partner's income for 80%. Next year, the partner with the highest income, that income is taken into account for 100%, and your partner's income is taken into account for 90%, so you could borrow slightly more. I hope that answers the question.
Well, we just we got another question in the Q&A, so I'll well. Is the landlord obliged to have insurance on the property? In general, how much are the costs?
Yes, they are. And by landlord, I think you mean homeowner. Yeah. So as a homeowner, the bank will oblige you to get a building insurance, and that's mainly because the bank wants to protect itself. Because if you have a mortgage debt and there's no collateral left because it's burned away, then the bank also doesn't have any security, so they will oblige you to get a building insurance. The cost depends on how big is your home. If you buy an apartment, then the owners association is responsible for getting a proper building insurance. If you buy a, for example, terraced home, then you need to get the building insurance yourself. And then it depends on how big is the property, where is it situated, those types of details. But to give you a rough idea, 20 to 30 euros per month is what you should consider.
All right. Cool. Then, well, we move on to the chat. We have, like I said, a few questions over there. A question from Lydia. Can you explain what is covered under the bank guarantee?
Did we answer that question already?
Yeah, I think so.
Yeah, I think so too. All right, and then I'll just move on to the next question. Rustam has put a few questions in the chat, so we'll just go over each one of them. What if I take a loan and lose my job, get a business afterwards, but still can pay while I'm looking for a job? I think, Cesar, you answered that question as well. As long as you pay,
life happens.
Yeah, exactly. All right. What about taking a personal loan to finance the money of above what bank thinks the house is worth for repairs or whatever?
I think we also answered that one. You could get a mortgage for to remodel, renovate.
A 70-year-old kitchen. Or yeah. Yeah. All right. Since I have a 1-year contract, what paper do I need from the employer for the bank?
So your employer needs to fill out a statement. This is a standardized form, and your employer needs to state if they are intending on giving you a fixed term contract, or sorry, an indefinite contract or not. Yeah.
All right. Before Rustam starts searching for a house, what confirmation does he need from the bank?
So we don't have something like a pre-approval in the Netherlands. If you work with a broker like us, we can tell you how much you can borrow, and we could check how feasible it is to move forward. You'll receive an overview from us, and yeah, that's you could start off by knowing how much you can spend on a home. So that's the confirmation you need.
Okay. I think next question has been answered by Kimo. Who's responsible for the inspections? Example given, what if after buying I find out that the pipes are rotten or there's some other problem with the house requiring repairs? I think has been answered, right?
Yeah, innocent until proven guilty. So you have the obligation to prove that the seller was aware of this, and it's a tricky one. Sometimes it's very apparent. We had one case where a power socket wasn't working, and they found out 2 days afterwards. It's very unlikely that it would have been damaged because they didn't live in the property for 2 days. So that's clear. But if it happens a couple of months in, yeah, try to figure out if the seller should have been aware, if there's anything that, but you have kind of like a research duty there, and also the duty to show that the seller was aware of this or should have been aware of this.
All right. Then he asks, when can I choose to rent out the house if I choose to buy it for myself, but later my situation changes? If it's possible to do so after 5 years, I decide to rent this one out. Am I eligible to apply for another loan on similar terms? For example, to move to a larger, more expensive house?
Yeah, so if you want to move homes, that is possible. Renting out, again, you need permission from your bank, or we need to remortgage it. Yep.
Okay. What if I decide to sell the house in the meantime? Can I repay it early or need to still keep paying over time? If so, how much per year?
No, there are two scenarios where you don't need to pay additional charges, and you can simply, so if you sell your home, you don't need to pay additional charges. The bank simply wants to see you repay the principal that is still open. You don't have to pay any extra interest. And the other scenario is not one I advise or suggest, and that is passing away. So stay alive.
All right. Exactly. The next question is, how does the process of selling the home before the mortgage is repaid work? Example given, if I decide to move in 10 years, can I repay it immediately or still have to keep paying the interest for X number of years?
No, I think no, you don't have to pay any extra interest if you sell it.
Okay. And the last question, I think, has been answered as well. If I have a business of my own, can I buy it through a legal entity? I think that the question was in the Q&A already. Yeah. Let's see if we can pick out a question we haven't heard yet. I think a lot of questions have been put in the Q&A in the meantime.
Yeah.
If I have an offer and for a reason the bank refused my request for the mortgage, do I have to pay penalties for the seller?
Yeah, I think we answered that as well. It depends on what you have in the purchase contract. If there's a clause that allows you to pull out, if there's none, then it's a tricky one. You probably can be held liable, but make sure you know if you want to put that clause in, if you have that clause in, or if you don't need it.
Yeah. Okay. Then a question from Boba. What percentage of the bid can we make as a down payment?
So I think this is a financial mortgage question. I think we answered this before as well. Technically, you're not obliged to make a down payment. You can make a relatively large down payment if you want. I'm not sure if there's any minimum that you have to borrow as a mortgage. Cesar, maybe that's something worth mentioning.
Depends a bit on the bank, but 50K, 75K is the minimum because otherwise the bank is not earning enough money. I mean, so, yeah.
Okay. All right. A question from Conrad. How long do you need to keep your property? Will you get any fine on selling it in 2 years, for instance?
No, not from a mortgage or bank perspective.
Okay. Let's see. And then I have a question from JJ. I put a question on the Q&A section about bank giving mortgages on leasehold houses outside Amsterdam where the leaseholder is not the municipality and also where the ground rent is variable. 10% of the annual ground rent in the first year, 20% in the second year until the 11th year where the full ground rent is paid annually going forward.
I think Cesar answered that question as well.
Okay.
It's a really specific case. Yeah.
Try to steer clear from privately owned ground leases.
All right. I think we covered them all.
I saw one question popping up in the Q&A.
Oh, yeah. You're right. From GSD. During refinancing, example given after 15 or after 10 years of paying mortgage, if I have extra money and would like to settle the mortgage, is it possible?
Yeah, that's possible. So if your fixed term is ending, then you could do it without penalties. If you're still in the middle of your contract, then you would need to pay an early repayment penalty.
All right. Cool. Well, if there are any other questions, shoot them now.
Or forever hold your peace.
Exactly.
No, technically, you can schedule in a free 15-minute intake call with us. Just reach out. I had the contact details on the website or on the presentation. We'll share this presentation. You can reach out, go to the website, and book in your free intake if you have any specific questions or if you're keen to move forward. There's also a bunch of information on both of the websites, so just have a read through that as well. But we're here and happy to support you through in the process of finding and buying and securing a mortgage for your new home.
Yep.
Wow! Thanks a lot, guys. Cesar,
Yes.
Ludo, great job. Thanks a lot for staying with us and for your for sharing all the knowledge and for managing the Q&A. Very professional, Ludo. Thanks a lot for that. To everyone who's still here, thanks a lot for sticking around with us so long. Have a lovely evening. You know where to find us. Good luck with the home search and the process of buying a home. If you're planning on doing it by yourself, if you're planning on reaching out, we're here for you and we're happy to support you. Have a lovely evening, all. Thanks.
Thank you, everybody.
Thank you, guys. Hope to see you soon.
Take care, guys. Bye-bye.